too, as we are way down on those lows. Despite all the talk about their turn towards a more tight policy, it just goes to show how powerful the Fed has been and the strength of that dollar resilience with the yen down as far as it is. But maybe we get a little double bottom to form on that long-term yen chart. That would be certainly interesting. Thanks, Ben, for the perspective. Good reminder, too, that it's not just the Fed this week. When we come back, we'll have some time until the bell to get ready for the week, talk with the portfolio manager, who's always got a good logical process. So we'll catch up with John Petrides as we look at a market trading higher this morning. It's a pretty decent little bounce. Obviously, the carnage from the last 10 days makes this look like peanuts, but dollars down and bonds and stocks seem to be okay with each other right now. Be right back.
I remember when I first started flying, and we would experience.
Good morning. Happy Money Monday to you. October 30th. We're in the final week of October. We're going to be looking at the stock market today, streaming, watching The SPY, watching GME, AMC, SoFi maybe, Nerds, see what's going on today beyond. Hope you guys had a good weekend. Hope you've had a good morning. Sub up, like up, comment down. Happy Money sticks around. And follow us on Twitter at HappyMoneyYT, as well as our Discord server. Link for those are in the description. We're going to be looking for some 0-day, 1-day SPY options, some technical analysis. And I'll get you a link to Discord chat. And I'm jumping in the YouTube stream voice chat on Discord if any of you guys want to join. Let's see, market opened 6 minutes ago. Have a gap up. SPY. Last week was mostly selling. See if we have a bit of a bounce. Morning, kitty daddy. Little too quiet, huh? Good morning, Guts. Guys, thanks for your likes. Appreciate it. Got 4 of you on the board for your thumbs ups. So, SPY, let's see, it's up 0.86 already. Had like a 0.5% gap up. Burns Wallet's up 9. This thing started rallying Friday. Gap up. SoFi, do they have earnings? Yeah, I think so. Good. WeWork is up. 0.3. SPY still rallying there. Beyond is up. A lot of these way oversold stocks having a little bounce this morning. Upstart, Overstock, AMC 4.25. Base is up 4. Osmo's even up. The K-Man. See if SPY can get out of this channel here. The selling channel. Been in for really most this month, or half the month. Pretty aggressive selling channel. Almost up 1%. See, 12% on SoFi, runs up 4.5. Broth, oh, Dish even saw up there. Peloton's up 4. Tupperware. Me's up 0.5%. Dish 3.4. SPY lifts all boats. Not really. Yeah, IWM's up 1.3. Nasdaq's up 1. SPY's up, hit 1. Yeah, hit 1%. Let's see, Big Lots 4.5. Funko 3.5. These are recently. Dude, these aren't even my watch list. Oh, look at all those. So let's see, we just hit yesterday's high on the SPY. Maybe probably first little resistance there. Okay. Sales up 6.5. Rework. First Solar's down 1.8, 1.1. Your earnings tomorrow. Got Dish up 2.3. Have earnings very soon. Already have it. Dish earnings is on 11/2. So next Thursday. Next Thursday for Dish. Buy at the high today. High of the day. 414.88. That's 1%. One goes up 2.7. They have earnings as well. First Solar at support. Up 1.7. Earnings coming up. Joan 1.5. Let's see, I think they just had earnings. Yeah, they had earnings. Wait. No, not. I don't know when theirs are. Not for a bit. Gobi. Earnings on November 1st. Lucid's up 1.5. Their earnings are November 7th. Tier is November 2nd. Flat on the day. And Rivian earnings November 7th. All these are next week, it seems like. Next couple weeks. And CQ 1.3. Excuse me. starting to taper a little bit up here. GameStop is red. AMC's up 5. Still going. Morning, Tiffany. GNS is down 1.75. Pretty big bounce on nerds there. Almost 2x since last Friday. NerdWallet sees credit card getting users to cites other offerings. Had earnings 3 days ago. Beat on EPS and beat on rev. That ain't bad. $5.7 on AMC. WeWork's up 14.5. Bitcoin still rallying. We've got Mara up 6%. Overstock also. Oh, fly. Had earnings this morning. Yeah. Beat. The beat on non-GAAP EPS beats by 0.06 cents. Revenue beat by 21 million. I just melting up still, 1.11%. Waiting on these puts. Aloha Maui. There's a break on the channel. Time. Might go all the way to that VWAP on this candle. Prefer to see it close under that support. Okay. Did pick up some puts there. Looking to close some for profit at VWAP. We get there. about GME. 1306, almost back to 12 bucks. $12.90 was that low. Too high there on SPY. Jumped back up into that channel. See if we get a retest up here again. I haven't looked. Do we have data today? 10 a.m. Nothing scheduled on here. Bond auction at 11:30. Dallas Fed manufacturing at 10:30. Well, maybe 11:30 if it's outside expectations. Maybe a little double top there. GME down 0.76. Sam's bouncing from that earnings. Up 5.6. GME down 1.25 now. 12.95. Close to multi-year low. Yeah, I'm selling some there. Morning, Bubba. I mean, sorry. Good morning, Guts. More sharks wait up for lunch. Yeah, this could easily go up. For sure. Good idea. It just break this channel though, so now we're just looking for VWAP. There it is. Now if the bears have it, we'll see low of the day for this inverse cup, then a bounce, but that inverse handle. If we don't make low of the day, probably still in some kind of bullish continuation. Could have maybe sold some on that flush. I sold a couple more there. I want to see if they break out of this channel. Downside. So fast. Not so fast, Mr. Bond. Wait, that is Mr. Bond. Some of the villains in Bond movies also had Bond-like accents. Right? New low of the multi-year on GME. The decade? No. Of what, the last 5 years? 3 years? Yeah, we hit it. 28.9 or 12.89. $12.89. We did it. It's now 1.6. Closing a couple more there. Gotta close some to get it to move. Put a stop on the rest. We get a bounce to view up, it'll probably stop me out. There's a little bounce to VWAP. And I'm stopped out. I closed over half, which good. Would have closed more, of course, but okay. We wait. Because we don't hit low of day. Look to go long up here. Break a VWAP. Test above that channel. Nerd's hanging up 10.5%. Works below VWAP now. Let's see, AMC still up 5. VWAP chop. Happy Money Monday to you. You guys had a good weekend. What'd you guys do? Happened. A nice reset. Thanks to the 10 of you for your likes. I appreciate it. Me down 1.76. 1288. 1250 was kind of the first support I saw after that 15 or 16. Where was that? Oh yeah, right here, 1540. See if you're getting kind of support on that. Otherwise, yeah, $10 and probably some single digit testing. A nice head and shoulders on the 5-minute. I'll let it chop. If I got a better entry. There's new low, broke through there. It would have been easier, but I got stopped out. So, oh well. Generac down 2.25. They have earnings on Wednesday. This thing is at multi-year lows. Back to 2020 prices. Beyond the green to red, down 2%. J Blue up 0.85. They have earnings tomorrow. Run down a quarter. They have earnings on Wednesday.
So you're seeing some bullish divergence there. The scare was not in the market as much. You would think with new lows that the VIX would increase, but if you look right now, we're still hanging around that 20 level, and we're getting a lot of positive things coming out of earnings, with the overall PE in stocks now at 17, which is below the 10-year average, and you're seeing net profit margins remain really, really strong, 12%. And a lot of these companies are reporting billions and billions and billions of net income.
Okay. So you still have a little hope here that earnings maybe can put the floor into this market, Alan?
Yeah, this week is very important. I'm a lose no sleep trader in the fact that I use longer term options, and we're looking at, March options now because the VIX still remains low. So I want to buy 3 to 6 months time. But from a technical standpoint, this range that we were in for the longest time, 4,200 to 4,600 in the S&P, we've broken down for now. Now it's the question to see what the next step is. But I had to remind myself, last week we were only down 2%. It felt a lot heavier than that. And even after all this, we're still only 15% off the all-time forever high. So, I know a lot of the sentiment has gotten extremely, extremely negative. We are a bit oversold. So it's important to see how we react. And when we get back above that 4,200, that could be a little bit of a save for now.
Okay. You're a smart guy, Alan, because I want to give you grief for being so optimistic coming into this earnings season, but I can't because you were never buying SPOOs in the NASDAQ, and your stock trades are doing better than the market. So, okay, why Victoria's Secret? How come you're going into retail? Stock hasn't really been great since they split with Bath & Body Works.
Exactly, and that's the point here. And I trade what I see.
Stock down too.
This is not a Peter Lynch trade. I don't know.
A lot of these are selling off into earnings.
With you, but the price pattern is what I like. We've got a PE of 5, so this is a cheap stock in relative terms. It's 70% off its highs from 2022. So it's dropped from 45 down to 15 of last year. So that midpoint magnet's at 30, and we formed a nice bottom base here between 15 and 20 for 5 months. A breakout of this range target is 25, and we've popped above the midpoint of this bottom base with some leverage long accumulation. So that's my money flow indicator that I follow. So somebody's loading up, and they're loading up with options in a bullish positioning. So I'm going to follow that lead. We're also seeing a bullish divergence in the fact, just like the market here recently, this stock made new lows in October, but not new highs in volatility. So you see a sentiment shift, a psychological shift, and at some point, these shorts are going to have to cover their positions, tighten up their stops, and that can feed this stock higher.
Okay, so you're looking for this thing to basically have this base turn into a breakout, ideally, because it has been pretty well range bound. Other than that brief foray below 17 bucks, 17 to the downside, roughly
there's your
21
flush.
to the upside.
All right, spy hit low of the day there.
So
Completed the inverse cup.
Right now, I can be a little bit more aggressive because I buy longer term options than just buying now and hoping it breaks out. I can position myself with that chip.
Get a handle.
So when it does break out, that it confirms that I'm on the right side. So I'm looking at a March 15 call. Again, the low
A little
on
gap
this
down there to
is
fill
just
also.
a little bit below 15. It's trading for about 5 1/4. It's $3 in the money. It's got a nice high delta of 75%. It's got, like I said, 5 months of time. It's only
VWAP
$75
test would be
more
nice.
expensive than the January option. So again, buy more time that you need. Buy enough time to be right. And let's see in the next 5 months, we can get a breakout of that 20, can get this thing rolling, and move up to that 25 target. This option gains about 100%.
All right. Okay, so break even $20. You need to get to the top end of the range. You actually don't even need to break it to start making money.
Right. Right, to start making money, but for my objective here, you know, I'm always looking for the longer something trades sideways, and I can lean on my friend Ben here for a lot of my technical analysis here today. That the longer something trades sideways, it's building energy, it's coiling, it's a spring that's building that energy that can pop.
You're low there on SPY.
When it pushes through that 20, and like I said, the catalyst is
Beyond hasn't
there's
announced
so much
their
built up unrealized profit from
earnings.
these shorts. At some point,
Their
they need to
estimate's on
cover
the
their
8th.
positions. Now, does that get follow through buying? That's what we're looking for. And we have a limited risk option that's, like I said, $3 in the money being long from 15 is, you know, a pretty good position in my mind to be there for that breakout. And that breakout will produce big gains in this option if we just get that 25 level. Like I said, this option doubles in value, and that's what I look for.
All right. So the double at 25.
Pretty funny guts.
break even
Yeah,
at 20. Buying
I didn't ever do that kind of stuff as an adult without kids.
Rather, in the money call options.
I mean, I
should be
guess
clear. Thanks.
a young adult,
Alan Nugman, Chief Market Strategist.
college age, maybe.
BullseyeOption.com. A little dose of hope there. The earnings can put
Late
the
high
floor in
school.
for the market. For some companies that are doing what investors want, the stocks are being rewarded. We'll talk about one next. Industrial logistics services company ArcBest had a big rally on its earnings, on top of a big rally over the past year already. We've got the CEO joining us to talk about the business next. Definitely an interesting one. In the past 52 weeks, up 33%. A good chunk of that came on the heels of its report last week that the market liked.
GME down 2.5, new low. Multi-year low, 212.78. You're low there on SPY, still filling that gap. For another entry into some puts. Waiting for a bounce. Oh yeah, look at that, we're right back into the channel too. Not being released yet. Maybe in the afternoon after a gap fill. Get a bullish play. Nerds holding that 10%. My size up 20. This is a zip pick. A lot of volume on it today, look at that. GME kind of selling on its own. Oh, did ON have earnings? ON's down 18%. Wow. First Solar selling off too. I have a short on this one, I think. GNS down 6. Alright, SPY's getting a little bounce here. Bouncy bounce.
Starts the week of November 6th. So MetaShare is up about 2% today on this news. I don't think
GME just flushing it. It's crazy. Down 3.5. 12.59.
You'd probably get annoyed by having to scroll through a whole lot of ads that sometimes seem perfect for you, and other times you're like, what are they targeting me for?
Well, the ads might know you better than you know yourself. Just be careful with that. All right,
Gotta
thanks.
be careful what you click on, because otherwise you get targeted for things that you don't want.
That is correct, really regardless where you're at. But Instagram really one that they are counting on right now with the reels and stuff. So I guess if they load it up with ads and then have people buy them off, then that's a business model that might work, because people need that scroll. I call it the psycho scroll. Psycho scroll. Just scroll, scroll, scroll. All right, thanks, Caroline. I got Kevin Hinks and Joe Mazzola with me for a little chat this morning. Joe is the Director of Trading and Education, joining us on the line, and Kev is here in studio with me, host of Fast Market, of course. We came off a little bit there, Kevin. You know, I don't know, maybe the bounce wasn't for real to begin with, but it's worth noting that Russell's now red, and it was the leader earlier this morning.
A relief rally because maybe no major event happened over the weekend when we got jittery on Friday. That's been the menu for the last couple of weeks. However, there's still so much going on this week that a little bit of jitteriness remaining in the market, probably not. Maybe a little fade based on what we've seen the last couple of weeks in price activity. It looks like that Monday morning rally is kind of a fade sometimes.
Yeah. Well, to your point about, so first step there, to your point about the kind of weakened nervousness with the Middle East situation, crude's now down 3% today.
Yeah.
So we're just not catching that bid. And then also to your point about, you know, disbelieving bounces on a Monday morning, it was the Russell that was bouncing the most, and that's been the worst over the past year. So to me, that was kind of like a red flag early on. Joe Mazzola, what do you think here? I mean, we've obviously got a lot ahead of us this week, but to see that the market can't hold that early bid, tell us anything?
I mean, I think the recent trade has been sell on Friday, you know, by Monday when you come in, right, after the move down on Friday. And you're right, that's not holding. I think, you know, part of that is the fact that yields started to rally again. You know, they topped out around 4.9 on the 10-year. But, you know, also the Bank of Japan announcement with flexibility in terms of their yields,
in there.
pushing their yields over 1%. And, you know, it's interesting, Oliver, because if you look at the earnings, for the most part, they've been pretty decent. So if that was the catalyst we were hoping for, that's not going to happen, because what do you got, about a 78% beat on the bottom line and about a 62% beat on the top line. It's a top line growth that's, I think, a little bit concerning for the markets right now.
Just a few minutes, man.
They're hoping for, so a lot of the earnings are really off.
Assume you're not swing trading those, but you're buying those for a long-term hold.
You know, I guess that's anybody's guess, but I think that's probably why the market ran out of a little bit of steam, that Bank of Japan announcement, and then also just kind of as you
the TA doesn't look bullish.
Parcel through the earnings announcements, they've been okay, but you know, I think everybody was hoping that the mega caps would provide that extra you know, kind of bump for the markets, and we haven't seen that yet.
Yeah, Seagate being the big winner here this morning. Not exactly the market hero, Kevin. I mean, obviously Meta's still up. We talked about that too. Got a nice little rally in Adobe going on. But on semi down 15%. A cut to some of the expectations for some of the companies we talked about earlier today, like Oracle and Datadog. I mean, the on semi move 2 down 15% is like just not a great start of the whole chip earnings, because they're further out. You know, they're later on. This is like one of the earliest looks we get, and I mean, 15% drop is like a massacre. Oh wow, it's down now 19%. On semi's down 19%.
There's a very interesting thing going on this earnings season, and that is, we talk about divergence on this network all the time. There's a slight divergence between earnings per share and revenue, right? Companies are raising prices and cutting costs, and that's helping with earnings per share, but revenues are struggling at these levels.
Yep, so the outlook for revenue missed meaningfully.
Yeah, it's a unique look at an earnings season that we don't get to see all the time. It's where earnings per share doing better than overall revenues. And what does that say about future, right? At some point, you have to stop raising prices. At some point, you have to stop cutting costs. And then you better get a pickup in the revenue side, or stocks will start to struggle. And you're seeing big winners and losers, stock picking earnings going on here right now, Oliver.
Definitely stock panning too. The fact that some of these companies in tech haven't lived up, and then some of them are just getting wrecked. It kind of seems like we're almost in a lose-lose. Thinking about a data point Lizanne had a few, I think it was last week, about companies who double beat are rallying less than they usually do. Companies that double miss are getting punished more. I mean, it seems like our baseline is fairly negative generally for the responses here, Joe.
No, I agree 100%. And I think that, part of it has to do with the fact that, the markets are on a 3-month slide, and you're just not getting, that push from the earnings cycle that I think a lot of people were hoping for. Even go back to Google earnings last week. They were pretty decent, and the stock got hit pretty hard off that. So it's just interesting, because you got to remember there's a lot of psychology in the markets, right? And if you're not getting that, what you hope for, the markets just aren't waiting for an excuse to sell right now, kind of given everything else that's going on, whether that's geopolitical risk, whether that's continued rise in the bond yields that's putting pressure on companies. I mean, you guys talked about the Russell earlier, how that faded. I think that's really important to kind of keep an eye on that, because if you talk about those small cap companies and their refinance risk, the moves upwards in yields continue to put pressure on those small caps. The mega caps aren't as sensitive to that because of their cash balances. But when you look at the rest of the breadth out there, whether it's the Russell, whether it's the S&P or the NASDAQ, that breadth isn't holding up. You only got about 25% of the stocks above the 200-day moving average. We need more of them to move up to kind of sustain this.
Indeed. Quick thought, Kev.
Net interest margin going up, yield curve going up, but no loan demand.
Yeah, all right, nice, I like it. Great convo, guys, thanks. Kevin Hanks, Joe Mazzola, putting a bow on it for MTL. Thank you for joining me. I will see you this afternoon at 2 p.m. market on close. Trading 360 with Nicole Petalides is up next.
See if we get a little head and shoulders here at the bottom. Continue filling this gap. Or we start chopping around. Almost 11 o'clock. See if we start to break this channel. Holding in it. Woof. Woof is up 5.3. They have earnings coming up also. One's at all-time lows. Pretty ugly long-term chart. Oh, now this inverse head and shoulders looks like it's gonna hold. Got VWAP here. More confident long would be a break of this. This channel up here. Probably what I'll wait for. There's VWAP on SPY. Oi. GNS is down 7.25.
For a look at today's top market stories, Tom White is with us, senior options contributor here on Schwab Network, looking at onsemi this morning. Good morning to you. I haven't seen you in a long time, Tom. Tell us a little bit about what you're watching there.
Yeah, I think it was all about guidance here. And if you think back to last week, Texas Instruments kind of gave you a heads up for the industrial chip space where they lowered guidance also, and that stock got hit last week. You're seeing it today in onsemi. The company beat on EPS slightly. They beat on revenue slightly. But it was all about the guidance moving forward, where they lowered EPS estimates by about 11% and revenue estimates by about 8%. The company's CEO did come out and state that, you know, they're managing and they're navigating the overall macro environment, but he did state that it's a weaker macro environment at this point, so that's going to be a concern moving forward. Stock's only up about 9% so far this year. It's hitting 6-month lows today. It did hit a high, you can see here, it hit a high of $111 this summer, and so it's fallen about 40% from those levels. And if you think the estimates going into Q4 are weaker, you have to look at the overall macro environment, the strikes that are going on, the consumer that's stressed as far as spending goes. What does that mean? Also, then you have to start thinking about CapEx spending. Some of the big tech companies last week stated that they were pulling back on some of their CapEx spend moving into the end of this year and into 2024, Nicole. So there's a lot of concerns on this one. The CEO's currently giving some more comments on the conference call to investors. But yeah, not a bad headline numbers out of this company, but then you start looking at their guidance and it kind of reflects the overall weakness. Now, this stock, this chip stock is basically in the industrial sectors, right? It competes with Texas Instruments and some others in this space, but definitely some concerns moving forward for this company, and the stock's reflecting that.
Okay, thank you for that. And also, I wanted to get your attention over to the UAW. You have GM and the UAW reaching the tentative labor deal to end the strike. You have some news with Stellantis and Canada as well. What are you watching there when it comes to all of this?
Well, it's not
30 minutes to
surprising you're
close.
seeing some weakness in some of these stocks. Everybody thinks that, hey, if you get a tentative deal that GM just announced about an hour and a half ago, that this is going to help the companies. But you have to start looking at the costs that the nearly 6-week strike has caused a lot of these firms. We're talking billions of dollars at this point. They've reached that tentative agreement. They've used the deal that Ford and Stellantis have in place, 25% wage increases over the next 4 to 4.5 years. Wages are going to be more than $40 an hour, including an increase of 68% for starting wages to over $28 an hour. That's similar to the Stellantis and Ford deals. And this is maybe a win for the for the UAW at this point. If you think about it, they started out at 40% levels. You knew that wasn't going to happen. But the automakers have slowly crept up their estimates,
Hanging out
what
above
they're
VWAP
going to pay
here.
these people. The cost of living, wage increases are also going to weigh on these. And then you have to look at that macro backdrop, Nicole, where, are they going to sell as many cars, moving forward? The macroeconomic environment isn't that positive at this point, but this is definitely a positive news for the automakers moving forward.
Yeah, I mean, they had to get it done. I mean, I understand both sides, but at the same time, it's not like the days of old when there were just 3 automakers.
Yeah.
The automakers are so fragmented here at home, abroad. There's so much competition. It's just a different landscape. And so I'm really happy that it seems like it's coming to an end here. Tom White, great to see you, senior options contributor. Thank you.
Thanks.
Let's get some insights, the news, shaping the markets. For that, we welcome in Peter Tuchman, senior equity floor broker at Trade Moss. Thank you so much for being here.
My pleasure.
So we have a big week. We have Fed.
Right.
We have jobs.
Right.
We have Apple. We're wrapping up this month of October. Your thoughts? Let's start with the big picture. It's been a down month again. Your thoughts?
Okay. So, look, I'm looking over the month or the last couple of months, and you got this feeling. So if things were as bad as they're saying, then the market really would have been sold off much harder. I kind of get the feeling. But as we inch towards the end of the month, and we really look up at these numbers, and we actually saw on the S&P enter correction territory on Friday. I think I'm caught off guard because it's sort of the way it's sort of been bleeding out the month. It actually is, the market has really taken a bit of on the chin, I have to admit. A lot of the tech sector, even though earnings have been okay, and I think 75% earnings expectations or results actually were better than expected, the market itself has definitely been starting to erode. We're now seeing it in multiple months, right? We started to see it in August, we started to see it in September, and it's clearly following through October. I think it's important to note the flight to safety. Look, I don't think there's a direct correlation as far as flight to safety relative to markets versus Bitcoin and crypto, but we're definitely seeing a bit of a rally there. It took a while to happen, and my kind of gut is that people are trying to look for some kind of a safe haven. We saw with bonds last week, entering a 3-4 month high in that market, and that was sort of, we've seen a number of those bond auctions where people were able to lock in this 5% or whatever it is, 4.5% to 5% levels, and people are comfortable with that, And when in a market that's sort of treading water here with sort of a negative bearish sentiment overall, if people are starting to pull out of equities and go into something that's a little more secure, whether it's gold, whether it's crypto, I think that sort of view of flight to safety gives me the feeling that the market is I don't know.
Yeah, and so the question becomes, what do, right? You had on the cover of Barron's this weekend all about bonds, right? I mean, it basically said time to buy bonds. The long bear market in bonds has pummeled portfolios, but boosted yields. And so how to invest as bonds blossom once again. So, I'm curious to hear what you would advise to folks on a portfolio at this point. You had Mike Wilson over at Morgan Stanley today saying, I mean, he's more notoriously bearish anyway, but just really saying, I don't really see that Santa Claus rally coming. When you have 3 down months, August, September, October, have not been particularly good, maybe there's some opportunities to buy some equities. Are there equities that you're sort of saying, hey, I'd like to buy some of the dips. I'd like to maybe get into some bonds. What would you advise to investors now?
Look, I think that we had the first 7 months of the year were spectacular.
Yeah.
Coming off of 2022, we've had a really good beginning of the year. And I thought people thought there would be some follow through from it. But I think we sort of got a little bit long in the tooth. We had definitely got hit up against some technical resistance. Clearly, 3 months in a row of this downward market, I think the market is
IBRX on this
is leveled off.
pretty sustained rally here since last week.
I think if
Up
people have been
17.5
watching
today.
stocks that January through June were really, really overbought. Let's think about Nvidia. Like, it was this year, in the early part of this year, that Nvidia was trading at $108, and it capped out after the last earnings at $520. So a lot of these names have taken a spectacular rally, and now they're pulling back. So if people have been watching a lot of these names and they're looking for things to be a little more cost sensitive, then it's maybe time to buy some of those things. I'm not here to advise them on that, but a lot of the stocks that we saw act spectacularly for the beginning of the year in the tech sector are now on sale. And when things are on sale, people should pay attention and take a look at it. But it's clear that it feels, I'm more of an analyst to analyzing what the market is doing, why it's doing what it's doing. And what we've seen in bonds over the last month or so is clear that people are trying to find some level of lock-in, a level of security, because there is clearly somewhat of a bearish sentiment over the last 3 months. I'm not here to say that we're not going to have Santa Claus may show up. Right now, it doesn't feel that way.
So
the Grinch correction.
We're going to hear from the Fed. Are you betting no move on the Fed? I mean, it seems like most people
IEP's
are saying
down
no
2.5. They have earnings.
You know what? Go ahead.
On the 3rd.
And then we're getting jobs after that. We'll get a lot of jobs reports. So we'll have
Tesla's down 3.25. Wow.
The monthly payrolls. What do you think the Fed should do or will do?
You know what? Look, I think it's fascinating how this market, we are, for a while there, our weekly and our monthly
cocoa company. I didn't know they were public.
Had a major significant impact on the market. All eyes were on the CPI, the
Earnings
CPI,
tomorrow on that one.
and all the inflation numbers. And I think we got a little bit jaded over the last number of months, where the market is not reacting in the way that people think. Last week we had some better than expected numbers on some of the financial instruments, and look, CPE was up when CPI was down. I mean, it was sort of, and the market did not react as if as it.
Video looks like a nice short.
So, I don't know what the Fed should do at this point. I think whether it continues to raise. Look, I think.
Can we digest 25 basis points and be okay?
I think we can.
Okay, so I think that's probably the best question, right? Because nobody really knows what the Fed will do.
We don't know, and to be perfectly honest, I think it's important for us to really listen to what his sentiment is afterwards. That's the main thing.
Yeah, the language is always so important.
Yeah, the language is the most important. The number's not that important.
Trade Moss, great to see you, Peter.
Thank you.
Thank you so much.
That guy's been in neck brace for like a year.
360. It's time for the big three. 3 stocks, 3 charts, 3 trades.
He's in the middle of a serious lawsuit.
Skip takes us through the trades for Alphabet, Spotify, and Amazon.
High coming down. Rejecting the top of that channel. So
Right back.
not breaking out yet. Sorry, that was me. It was me. Yeah, I'm getting some puts there. Stop will be a break on this channel, which Where I should flip into calls. I got these earlier actually, once we broke back into that channel. I'm thinking about that. Active a WAP.
Minutes before Wednesday when we hear from the FOMC. We've got Apple's event today and then Apple earnings on Thursday and employment report on Friday. So any one of those could
We'll break a
spur
VWAP there on SPY.
more attention to the Treasury and the big
She runs at like
that's coming in and
15 frames per second.
as this market
Webcam.
is digesting that higher for longer. So that's what I'm paying attention to. But there's a lot of opportunity for catalysts
Up, thumbs
that
up.
could send the market really rallying or keep it where it is in that sideways area.
Right, understood, and that was a good list. That's absolutely true. We're watching all of those things that you named today. In the meantime, Alphabet's on your radar. What is it that you are looking at for here?
Yeah, so there was absolutely a recent pullback on tech on Friday. We're seeing it rebound today. I think pullbacks are an opportunity to add to your longer term portfolio. So ideally, it would have been great to do this on Friday. However, not still too late because we're finding support. I already own Google or Alphabet. I have a hard time saying alphabetical. It's Google in my eyes. But so what I want to do is actually sell a covered call on the position
Closing
that
a couple
I already
here.
own. This allows me to reduce my
In
risk
case we find the
exposure.
bottom of this
I'm
channel.
actually selling the December
Support.
15th 135 strike. That reduces the amount of capital that I spent, but gives me room for capital appreciation. It's the way that I add yield into my portfolio. And what I think it's important to note when we're comparing all of the tech earnings that were really, really well, and Google did have a sell-off due to its forecast, thinking about the AI picture and something we've talked about quite a bit, Microsoft and NVIDIA, they have direct revenue exposure.
What do you see in the
early on
chart?
in the AI cycle.
I see
They have
lines and
Microsoft
candles.
has exposure to OpenAI and NVIDIA
dead
through their
people.
GPUs. So we
Ah,
know
looks pretty
those are
bearish.
direct exposure immediately as we're considering AI. If you think
Not
about
too
Google's
It's hard to see head and
play
shoulders
and
up here.
touch points that it has within
Below
the
all its
AI
moving
cycle
averages
and how
continues to
it brings
reject
it to life. It's going to take some time to show
50
up in earnings.
resistance.
So that's why I still
Lower lows,
think
lower
that
highs.
the potential has not been realized for Google, and I'm excited
Need
to
it
see
to
that. Aside from the
break
valuation
that-
perspective, there
that
is a
area.
98% buy from 53 analysts. That's a really high buy
With
rating.
maybe
It's
inverse head and
attractive from a
shoulders to be
valuation
bullish.
perspective for a
That's on
tech
a longer
stock.
time frame.
It's trading at 18
Intraday and
times
scalping,
forward-year
I don't know.
earnings. Expects 11.4%
It's got some gaps down here. 559. Probably
EPS
get
growth
filled.
all forward year 2024.
Maybe.
And I think that DOJ trial that's happening right now could be a risk, but it could even be a catalyst. So a lot here.
Yeah, and you have it's basically about the search dominance in this U.S. antitrust case, but it always seems that these names, many of the Magnificent Seven names, are on the DOJ radar and regulators in general.
100% audience engagement.
And what could happen. Ben, your thoughts
So proud of you,
on this
Kitty
chart?
Daddy.
I
Your
mean,
math has come
clearly
so
it's been a
far.
winner, but it's
Even though
off
it's still
the
earnings, but
had earnings
you asked me
recently.
about the chart. You didn't ask me about the earnings.
Yeah, it's been somewhat two-sided, Nicole, and I
Yeah,
think,
I mean, maybe they'll have a,
solid breakdown there from Jessica
like I
in
said,
terms
you're
of
talking
fundamentals, but I'm
short term also.
hearing somewhat of a two-sided narrative there as
Well, the
well, and I
earnings
think
that
speaks
gapped
to what
up
we're
and has
seeing
just sold off
in terms of
since.
that
So
longer-term price activity, which we'll get into
good
in just a
earnings can
second.
sell off and
But
bad earnings can
let's
rip.
begin with some of the conviction that we did see recently. The high
So yeah,
conviction
maybe it'll have
rate
a rally.
lower. It's
Just
on the left side of the screen.
I would wait
and
to
we're
see if
up
it
around
breaks top of this
140, if you
resistance
remember
line.
last week, and then that move lower. I'm sorry that we traded down into around that 123.
But today's
level.
pretty
You can
bad.
see
It looks like it
since
wants to
then
break the
we've been
bottom of
mostly
it.
sideways. So,
If it starts to accelerate, it's
overlapping rotational
more bearish.
acceptance of that move. Look at the volatility we've seen within
As
this
far as like breaking out of this,
$4 or $5
support has
range
continued to
here just over
respect.
the last
a couple hours it has been playing out. But along the way down, you can see areas of consolidation that also form. So we've got a pretty well-defined trend.
Those are the gifts in the market. Great earnings, and it gets cheaper.
See again the areas where the market's kind of paused and regained composure. You can also see the retest of that 126 level right now. So still in a bit of a bearish pattern here as we're looking at
hit it again, you get to 18.
5-minute candles. So we don't want to put too much weight into this
GME?
more granular time frame. But let's step back here so I can show you what I'm talking about in terms of just not a lot of conviction, because we were in a bit of an uptrend. Shares of GL had been recovering from
a couple more there.
We're talking in the middle of July all the way up
to
again,
that channel a little bit.
141. You could see the high conviction move we just looked at to the downside and how that took out 132. So kind of
if we break
losing
here,
that working assumption that we were forming value at higher and higher levels. Another step back shows after recently invalidating a downtrend with this up move, kind of
look for horizontal support,
right
412,
so out around 140, a key area,
50 down to 412, and then potentially back down to the bottom of this channel. Still filling the gap.
For that shorter time frame type movement, but not a lot of conviction or follow through in terms of those longer term trends that we look for.
Yeah. All right. So that's the whole thing. When you look for the longer term trends and you want that follow through, the sort of where is it? But there's no doubt that people still look to Google as a growth opportunity.
You bring yourself right into neutron zero because of their Halloween.
Yeah, that's the beauty
delivery.
Of calls. It's right at 135.
Halloween presents.
Close to that resistance point that Ben pointed out. It's
all right, Katie, I'm going long.
Get additional premium while selecting a target price and reduce your overall risk exposure.
All right, next up, Spotify. 1 year, it's up 100% basically. Your thoughts on this name?
Yeah, so there's certainly a lot to like about Spotify and their recent third quarter earnings results. They have pricing power. So
you have Siri or Sirius?
Two main components. One is from their previous services subscriptions. That's about 90% of their revenue. And the remaining 10% roughly is from ad-supported revenue. And they saw growth in both.
Oh, I know. They were just diligently working.
They saw 10% growth in their premium subscribers.
All right, let's get this gap fill, Spy.
Absolutely great. And they saw
410.91. Let's go.
And their ad-supported revenue, which I found very interesting as we're thinking about the other stocks that report and we focus on ad-supported revenue. And that I think there's a shift to podcasting. They own that market share. So there's a really good growth opportunity there. Now, when we're looking at stocks that have growth opportunities, they require a clear path to profitability, which I can clearly see with their improving cash flows and margins. And subscription models are a key theme that we see absolutely everywhere.
Free trial.
And,
oh, like a vehicle?
She released her Taylor's version over the weekend. That certainly helps with podcasting and her release.
Coming on new vehicles?
Or that's there. So perhaps there's a lot to like about Spotify.
So, yeah, that's the whole thing.
Setting up this trade.
That's the only time I ever had Sirius.
Stock utilizing options, especially if there's
a little fleshy on Spy.
A December 15th 160 put, collecting a premium of about $850. That represents a 5% discount with Spotify around $160.
Yeah, and didn't we
all I had to do is close a couple contracts, see how it works. Magic. It's magically delicious.
Mark for Tay-Tay. Okay, Ben.
Well, as I look at shares of SPOT,
GNS down 9.
Very much range bound right now, and I think that's a bit of a disappointment when you consider the longer-term trend, which has been to the downside. The bulls were looking for something a little bit more definitive with follow-through after earnings, and unfortunately, as you can see, as we look at the reaction that we saw to the news last week, while we spiked up to 174, follow-through has just been non-existent. We're kind of still just stuck in this range that we've been in. You got a pretty well-defined upper extreme 173. You've got a lower extreme established here around 145.
So maybe the free vehicle trial.
Again, not a lot of follow-through after the initial move. So let's take a step back, right? I was saying.
Oh, you did an online one and they got a vehicle one too.
Well, one thing that I mentioned here is
that's pretty thorough for someone that doesn't like it at all.
Fell short of a
that
the bulls were looking for up around 182, and then you've got a recent low around 132. So even in this bigger picture, kind of just range-bound type price activity where you failed to take out this key high recently.
All right, might just hold the rest.
Somewhat limited in terms
Put
of
my stop on it. Break even.
After earnings event in a trend up, you'd expect the bulls to be able
Maybe I'll
to
sell
get some momentum and
one or two down here.
Continuation
We
of
hit
the
it.
pattern that we have been seeing. Maybe the reason is, well,
Could
take
be
a
hitting
look,
this
because the
right shoulder
longer-term trend
too.
has been to the downside, and this also speaks to the significance again of this 180, we'll call it, area, because that's an area where we failed. If you remember, when we rallied back in the beginning of 2022, we rolled back over into the lows around 69. So one could argue just kind of in this wider range, but still in a bit of a downtrend. That has me a bit concerned, because if we've now double topped, start to roll over, take out 120, open up a door for a retest of that lower extreme. So again, yes, there was a positive reaction to the earnings news, but it was failed to get them above a key area of resistance right now, and we're still in a longer-term downtrend here.
Yeah, and I see, I mean, there's others who are on board here. I mean, Bank of America, for example, put a 203 target up from 185. Strong third quarter earnings, maintain their buy ratings. JP Morgan has an overweight on Spotify, raises its target to 205, and this is trading at 161 today. So, you know, on board with the higher potential here for this name. Jessica, I'm going to move on and get here to Amazon. Unless you wanted to add anything on Spotify, please do so, but then get to Amazon.
Absolutely. There's a key theme with the trades that I have this week. They're not trades, they're longer term.
Nice, Kitty.
And they are bullish to neutral, which means I'm just being cognizant of the moves that could happen within the market and adding to my longer term portfolio. That relates to everything. But to Amazon, again, buying opportunity, 93% buy rating from 60 analysts. They had their last deal day earlier this month. That formed 50% better than it did last year for their third parties. And that's due to the logistics that we talked about in the restructuring with the local. And now that's showing up in results. When we see restructuring and there is a shift in expectations in revenue, and when we see it show up in results, that's really great. And Christmas season is coming. They're not going to be a recipient of those bigger theft issues that we are hearing from Target and other big retailers. So the way that I'm positioning this once more is utilizing the cash secured put, same expiration, December 15th. I'm selling a 130 put, so as close to the money as I can.
Secured put, this is the way.
For this one, I'm bringing in a premium of 703, and that represents a 5.5% discount to its current price around 127.74. But think about that from a yield perspective, that's 5.5% that I'm going to get throughout December 15th. So in terms of premium, that's also a good way to consider the way that I'm structuring these trades today.
Right. Okay, and these are, as you said, more of the long-term bullish to neutral. You're aware of what the market, you know, could be bringing us. Amazon, your thoughts, Ben, on the charts, please.
Well, it makes a lot of sense because this is kind of a mix of the two other names that we've looked at, and I have to default to Jessica on this one because when I opened up the charts here, I didn't really see anything that was providing anything really definitive in terms of structure. But we can take a look at some of the recent price activity, and I show you what my eye was drawn to. A very well-defined downtrend that we had been seeing. We're going back to when shares were up around 146, recently down to 117. That was a continuation of this move. You can actually see how we established a new area of balance at lower level, but look what happened. We didn't spend a lot of time down there around this 120 level, and we actually rallied right back up, and now we're taking out 129. So we could be starting to establish something very bullish here if we can continue to see momentum here, reject this lower level, take out 129, and it could be off to the races here. The unfortunate thing for the bulls is that you can see there's been some headwinds to some of these big tech names. And again, if you remember, shares topped out around 146. Now, the thing that had me a little bit disappointed about that move was it failed to take out the end of July, beginning of August highs that we saw with any conviction. We rolled back over, back through 138.
Maybe I can actually hold these. I'm getting stopped.
Extreme of the range that we had been in.
Hard on dailies.
That key area 131, and you can see how since we've kind of just been balancing, we can call it around 128, but definitely not what the bulls are looking for, right? This is a more intermediate time frame. We're talking about a 4-hour candle.
Might start doing tomorrow's contracts.
Over at this point. I wanted to show
the next
you
trade.
The message is even a little bit more clouded when you talk about the daily, unless you're talking about potential for a further downtrend and weakness here, because this is where I start to see a little bit of something a bit more definitive. You got a pretty well-defined double top here. Again, that recent
might not close any of these until gap fill.
150-ish. You can see the key area at this point, 115.
If
you open up the door below that,
for
again, in a
410.
similar pattern here, you could see a retest of that lower extreme, the lows from the end of last year, beginning of this year. Ultimately, not what the bulls were looking for here in terms of this longer-term chart, but somewhat cloudy when you look at the other two time frames, I guess.
No idea.
Okay.
I think they'll do what's
Jessica,
expected.
final thoughts here.
Gotta look at the Fed funds futures.
In the market, more
to
attention
see. I think
to bonds
it's
than
25 base point.
We'll see what happens.
Highest probability.
Thank you both so much. Jessica Inskip of Options Play and Ben Lichtenstein, a great big three. We had Alphabet,
They haven't changed their terminal
Shopify,
of
and Amazon.
whatever it is.
All
So,
right, coming up next, we're gonna look
in
at
fact,
how
last we heard they
Apple
updated
does,
it was
time to spotlight
higher.
Apple. You have the big event this
So yeah, I would
evening,
imagine
the
they're raising.
Scary Fast event.
I don't think they'll raise
You
more than
also
25
have
though.
earnings coming. What do we need
If they
to
do
know?
raise.
That's all coming up next.
What'd you get for tomorrow? Got a little something something for tomorrow? Oh, you got. Oh, I see. Just didn't feel right. No, that's good. Yeah, I like trading tomorrows. I think. I think I'm more successful with them.
Announcing it's separating its hard drive and flash memory businesses. So, how are investors reacting to this?
We've seen a little bit of a positive reaction post this announcement here. It was up actually over 10% earlier in the session, up around 6% at this point in time. But you are correct. They are going to be splitting off its flash business. And then Western Digital is still going to command the hard disk drive business, which has been the core area of its focus over the last couple of years. This is after Western Digital actually had a breakdown in a deal with Kioxia, which is a Japan firm, in order to try to enhance its flash business. And now they're going to see this little bit of a spinoff, if you will. Now, one of the bigger investors, Elliott Management, which owns a significant portion of Western Digital, is also supporting this particular move. And that's another reason why we may be seeing the stock move to the upside here. Now, the flash business was actually originally acquired from a $19 billion acquisition from SanDisk back in 2016, but it's been very difficult as margins have been very compressed, as well as the competition in this space continues to increase. So this is why we have seen the flash business really dragging down on Western Digital, and hopefully they're trying to find a resolution by spinning it off here in the near term.
Right, understood. And then you're also looking at Pinterest. Reports this afternoon after the bell. What are people looking for?
Yeah, and this one can actually be a mover. We have the options market implying around an 8.1% move to the upside or downside. The market is expecting total revenues to come in at $743 million. That is going to be up from a year ago. And we are also expecting the adjusted earnings per share to come in at around 21 cents. That would be almost double than what we saw a year ago. Now, the big focus is going to be their enhancements for their platform in order to provide a better experience for their small businesses or their customers that rely on Pinterest in order order to drive sales. And so we are actually expecting average revenue per user for the US and Canada to come in at $6.30, for Europe to come in at 90 cents, and the estimated monthly active users for the US and Canada, right now the estimate is sitting at 95 million customers.
I stopped out of those.
The biggest focus, once again,
I think with the dailies, if I'm, you have to have wider stops if I want to do it.
Coming from them around ad spend coming in.
Sorry, I took profits on it.
Half
Look for calls if it breaks up here.
Did hear from Meta and Snapchat.
This will be the bigger trade of the day.
Of ad spending coming off the table here because of the conflict that we are seeing in Israel. So I think that's going to be another focus. If that is the case, then we could see some volatility to the downside, unfortunately.
Right. Okay. Thank you for that, Kevin Green. Great to see you. Really appreciate it. Senior markets correspondent. All right, it's time for a spotlight on Apple. The company is having its latest product event tonight at 8 p.m. Eastern Time. The tagline there, scary fast. And Caleb Silver's with us, editor-in-chief at Investopedia. So what do you think? I mean, tonight's product launch, I think it's always exciting. They always have catchy names. Your thoughts?
Yeah, it's at 5 p.m. Eastern Time, and it's online only, which should just tell you that it's not as big as its product announcements like the one back in September, but it is about Apple's next evolution in its chip making. This is probably revealing this Mach 3 chip. Remember, Apple's been moving away from Intel for the past several years, developing its own chips, the Mach 1, 2, now the 3. So they'll probably debut that tonight. That's the buzz, and they'll probably show you how quickly it works inside some iMacs, maybe some MacBook Pros. So it's a very chip-related event. The eve before Halloween, my birthday today, and they're going to be having this event tonight. Not a big market mover for Apple. There's a lot more concerns that we're going to be thinking about as we head into their earnings at the end later this week.
All right, there's test of it.
So, I mean, your mom had to decide if you were going to be a trick or a treat. I guess you were a treat because you came before the actual Halloween day. Very good. Happy birthday.
Want to see a pullback. Want to see the candle close.
I mean, how do you think the iPhone 15 has been received?
Not great. And we have these surrounding issues, obviously, with China right now that need to be sorted out. We want an update on that when we do hear from Apple later this week. But the iPhone 15, not as hot maybe as they thought it might. We've seen slower sales as of the last quarter. Now the 15 was supposed to drive sales. We'll see what happens. We're just getting into the holiday spending season. You know what that means. And Apple has high hopes on the 15. It's not a lot more expensive. I think
Don't
it's
like
the same
channel
price
break plays.
as the last models, but you need to buy the extra charger.
However,
it's got some other hardware that goes with it. It could be a good catalyst for Apple. It needs something
right
now
early.
Because since
we got in here,
earnings,
but yeah.
at the earlier this summer, the stock has been down some 12%.
Might be
There's a
rejecting.
lot of expectation for Apple to have
Might be
some
another chance to get
catalyst
back
for
into
investors
puts.
to get interested again.
Yeah, understood. And then we think about, I mean, I see the MacBook Pro may have an update with the M3 chip. You talked about a few of those things. Also the wearables.
Oh, you closed.
That always seems to be a good holiday.
You closed at the bottom of this. We rallied since you closed.
Sure. Wearables and services, these are the parts of Apple that are growing right now. That's great. The thing is, Apple needs to, the bigger part of its business is to grow the hardware part of its businesses, the more expensive part of its businesses, and its server business to really drive that profitability and those margins. The wearables are nice. The service revenue is nice. It's just not as big as Apple's other businesses, and that's what investors are worried about. Plus, they're concerned about the China situation. Since China's government pretty much outlawed the use of iPhones for government use, the question is, what happens next? Is this extend to consumers? How deep does this go in terms of China and its consumer users? Because without China as a major customer for Apple, that company has some problems in terms of growth.
Get puts.
Yeah, understood. I mean, and you know, I always sort of wonder, Apple raising the prices, the Apple TV Plus and other subscription services. You noted that services has been a growing area. You know, I don't know how Apple TV compares, but any final thoughts on Apple? Otherwise, I also want to get to UAW. Did I leave anything out for Apple? We're going to be getting earnings too this week.
Yeah, that's right. Earnings later on this week. And the expectation is that, you know, they've been really tight-lipped about guidance, but are they hitting sales? Is the 15 on trajectory to hit the kind of targets that investors and analysts want to see? That's a big factor in the China question. Has got to be answered. But also AI. Apple doesn't talk about AI much. Everybody else does. Is it Apple's turn to talk about what it's doing with AI? That could be a big catalyst for the stock.
Yeah. Do we feel like the UAW stuff is finally done? It certainly
Spy
seems
back to
like
VWAP.
two agreements.
Glad I didn't get picked out by a little break.
Tentative agreements. Does it feel like it's finally done here?
I think all sides would like to see this done. The big three would like to see this behind it. The UAW
The fact that they weren't able to bring it lower than this low,
it is a costly
little more
agreement.
hesitant to get
It's going to
puts.
cost these automakers billions of dollars over the next few years. Deutsche Bank is out with some estimates today talking about Ford's agreement costing it $6.2 billion over the terms of the agreement. The master agreement's 4 years. GM, $7.2 billion, and Stellantis about $6.4 billion. These automakers, as you know, Nicole, are struggling with selling cars to begin with right now.
6.4% on AMC.
To electric vehicles is going to be very costly and time-consuming over the next few years. That's where a lot of the labor battles were going to be pitched. Not right now, but for what's going to happen over the next few years. So costly agreements, but having that behind them is a good place to start. They can start building their futures with their labor force right now.
Yeah, and I wonder if, I don't know that we've gotten any news on this, but Tesla was supposed to be somewhat of a beneficiary to a certain extent of this standoff that we've seen for so long.
Okay, selling VWAP a bit.
There were jokes going around that he was putting the champagne on ice. And did you hear anything like that at all yet?
No, Tesla's units are moving, but they had these heavy discounts. Don't forget that, Nicole. Over the last several months, they've taken it down for some of their most popular vehicles, 20% in some pricing areas, and they intend to keep them that way. So they'll do whatever they can to extend market share in electric vehicles. But penetration for electric vehicles in the United States still only about 3 to 4%. We have a long way to go, and it's a long
It's
road
nothing,
for these
my
automakers
man.
to compete. Tesla probably benefited on the margins a little bit. The fact is, not a lot of people are buying cars right now, given those high financing rates.
Yeah, and while I haven't seen the anxiety index today of Investopedia, I'm sure they're happy October's finishing up. Just for seasonality, it's just always not the greatest month. There's got to be some sort of relief there. Caleb Silver, till next time, thank you so much. Coming up next, the Disruptors.
Getting into this one.
Harris just got an upgrade over at Raymond James. We'll hear all about that because George Sillison standing by is a closer look at this stock. LHX is the ticker symbol. An example.
Minutes from you close. Bounced above VWAP from it. Come back down below VWAP. Most confirmation of the put would be break of this channel. Could try and front run it, but careful. We're getting to the end of the wedge here. Consolidating into a direction, I believe.
20%. And you would think that because this is an aerospace and defense business, that it should be higher considering a lot of its peers, companies like Raytheon, Northrop Grumman, General Dynamics have been higher because of the war in the Middle East right now. But this stock has not been moving higher, and I think I can see why. But I also think that Raymond James, which actually now rates the stock at an outperform from a market perform, they have a $210 price target. They actually see an inflection point for L3, which doesn't actually produce rockets per se, for instance, and of course military vehicles and such, but it actually has mission critical support systems like intelligence, communications, surveillance, tactical warfare technologies. They also supply components that are utilized in aerial drones, for instance. Again, so I think the company overall is well positioned in the aerospace and defense industry, but it has fallen out of favor in the past year or so from an investment standpoint. But it looks like potentially there's an inflection point, and this is what
chops
Raymond
midday.
James is actually looking at with their call today. Now, if you look at the earnings
Be careful here.
reported last week, they actually generated $3.19 a share on an adjusted basis. They beat the estimates, but it was down slightly from $3.26 last year. But they did beat sales, and those sales were higher by about 15% on a year-over-year basis. And they did denote that their backlog is actually increasing, as well as the fact that we have to consider some of the macro-centric catalysts for companies like L3Harris and the other defense contractors, that we're operating right now on a federal government budget standpoint, or from a budget standpoint, on a continuing resolution. Now, coming up in mid-November, hopefully they'll either come to the conclusion of a real budget or an actual budget for the fiscal year, or they'll continue the resolution. But I suggest that defense spending is probably something that's not going to be shied away from coming up in the next fiscal year, contingent upon what's going on in the Middle East. But if you look at L3, interesting enough, I mean, the stock is down 30 or so percent over the last year. When you actually look at the earnings profile of the business, their earnings relative to its 5-year average from a net income basis is down about 15%. But at the same time, it's already trading around a 28% discount to its 5-year average. So this Raymond James is looking at, and I can see that from a financial aspect as well.
Yeah, understood. And with the margin potential, LHX, which is at 175 today, how would you go about an example trade for this?
Yeah, so when we look at the stock, Nicole, obviously it's still to the downside, and even on a weekly basis, it's been trending lower. So we're not going to catch a bottom here or try to guess if this is a bottom in the stock. It certainly could be, but what we can do is we can harvest some yield in anticipation that maybe it's in a bottoming process. So what we're going to do in this case, because volatility is still rich in the overall markets and premiums are rich in options, we're going to sell basically a cash secured put, and we're going to go out to the December contract with about 47 days to expiration, and we're going to sell the 170 cash secured put. Now, altogether, earlier you could have sold this for about $5 a share or $500 a contract. So the stock really doesn't have to do anything. It can go higher, that's fine. It can stay where it's at, but it also can fall all the way to 165 before you're at risk of break even, and that's where your break even level is. But selling that $5 premium, you're basically harvesting close to 3% yield between now and expiration in 47 days.
Right. Okay. Thank you for that. George Sillis, great to see you. Really appreciate it. An interesting disruptor today. Coming up next, it's time for our 360 round, and we are watching McDonald's on the rise. Some really positive comments, a beat on the top and bottom line here for the third quarter. Our panel will...
I did get some calls in the break of this channel. There was a couple here. Went pretty big, so longer frame channel break like that usually entails a bigger move. I have more conviction in them. That said, it's middle of the day almost. We are close to VWAP, and there's a gap below us, so I'm gonna be taking a little more profit this high if we get there. Probably 414.61. But shooting for a break of the high day. I'll take some more profit the high day if we get there as well. Couple more there. Close a couple for it to go. I did do 0 days on these two. Before noon. Like the move. $12 and 45 seconds. She's up 6 1/4. GME's up 2.5 or down 2.5. You guys gave me 16 likes. Well done. Thank you. That volume 1 big green candle. Be kind of double topping here. It's quite close some. That's a pretty big channel break though. So I'd say can't end any of these resistances and it's back into a chop.
Russell 2000, the small caps, up just over 0.25%. To help me break down this market action, let's bring in my co-host Kevin Hinks. Kevin, it's all going to be about data, earnings this week, correction territory for 3 of the 4 major indices. We're getting a break today, but the sentiment is still negative, I think, at this point.
It's interesting, the tension every Friday afternoon leading to a little bit of relief every Monday morning. But the question is, it doesn't always last very long.
Right.
And this is a massive week for the markets. How about this? 1,326 names, 162 S&P, 29 NASDAQ, 4 Dow Jones, a Fed meeting. But Tom, the most important thing this week might not be any of those. It might be this Treasury refunding announcement that's going to happen Wednesday morning. And the more you read about this, the more you read what it is and how important suddenly supply for bonds is on the market, this could be a massive move in bonds. When they lay out how much money they're going to need for the next 2 quarters, that could be a little bit of an eye-opening, sobering experience for at least the bond market.
Yeah, definitely. Supply, bonds have been falling, yields have been rising, the 10-year just below 5%. So, I think one of those overlooked aspects of what's coming out as far as data that might move markets.
Because suddenly out of nowhere, bond supply matters, right? Because you don't have the Fed buying anymore.
Right.
You have foreign governments not buying as much as they were.
Right.
And then you've got a massive supply of needs for the U.S. government, and something's got to give there in a way. Maybe part of it already has. We'll see when those needs come out, but that could make for an interesting Wednesday morning ahead of Jerome Powell.
Yeah, we'll definitely keep an eye on that. A lot of data, a lot of earnings this week. We'll
so much
dig into
easier.
That, in a little
It
bit.
doesn't just
let's bring
waffle
Caroline
around
Woods,
after I'm long.
Senior markets
I
correspondent
guess
here
I'm
on the network. Chalk
far up.
a little bit of McDonald's, a little bit of fast
Don't like
food. Getting
price action though yet.
pretty big jump here today. But this stock, Caroline, falling, pretty precipitously from those all-time highs we saw about 3 months ago.
Indubitably.
What was your takeaway from the report today?
Hey there, Tom. Yes, McDonald's getting a nice bump today after beating on both the top and bottom line. Shares up more than 2% right now, but still negative year to date, inching closer to the unchanged line, but still down about 0.7% on the year. Those GLP-1 weight loss drugs really weighing on sentiment, especially over the past 3 months. Not seeing those reflected in the actual numbers, though, in terms of McDonald's results are really being talked about on the conference call. But just running through these numbers, adjusted EPS of $3.19 easily topped analyst expectations of $3 per share. Revenue grew 14% to $6.69 billion versus $6.57 billion that was expected. Overall, same-store sales rose about 9%. Here in the U.S., same-store sales rose 8.1%. That was more than what analysts were expecting. They were expecting somewhere around 7.5%. McDonald's attributing that better-than-expected number to strategic menu price increases.
Break here if it does. I think it should be pretty big.
Reported same-store sales growth of 8.3%,
kind of the precursor.
thanks to strong demand in the UK, Germany, and Canada. CFO Ian Borden on the conference call said, as expected, challenging macro dynamics continued this quarter and consumer spending remains pressured. And they continued, it's clear that our customers continue to seek reasonably priced meals as rising costs persist and our markets around the world continue to respond. However, I will say that they specifically pointed out that the customer who makes under $45,000 per year, so the lower income customer, is being more discriminating with their purchases, and that resulted in a slight decline in Q3 traffic. But McDonald's did then gain market share in the middle to higher end income consumer, which is evidence that the consumer is pressured and trading down to cheaper food items like on the McDonald's menus. So I did think that was an interesting kind of note about the consumer there, something to definitely keep an eye on, and they definitely are as well. They do expect cost inflation headwinds to continue in Q4, albeit maybe at a bit slower of a pace, but there was still quite a bit of talk about inflationary pressures, and they expect those to continue. So taking a look, McDonald's shares up about 2.3% right now, and giving the Dow a nice boost today.
Caroline, price hikes offsetting falling traffic numbers. This is something that we've seen across a lot of retail, across this economy. There's a divergence going on here, Caroline, between earnings per share and overall revenue and those numbers. And it's almost like a chart with two things diverging. They're cutting costs. McDonald's talked about affordability and value and how they appeal. And it's interesting, your income demographics with higher income people switching to McDonald's, that shows the overall economy. Here's my question to you, Caroline. Is this economy screaming at us weakness that some of the data is not telling us?
I don't think it's screaming. I think as, so many of the data points have been showing, or so many of the economists have been talking about, it's really the lower income consumer that, continues to have to pay the same amount for gas and groceries and all the things that cost more in life that maybe aren't seeing the wage increases that so many others are seeing, that continue to be under pressure. So I wouldn't have gotten the sense that it's screaming. They're definitely seeing trade down, accumulating some of those mid to higher income consumers. But then you look at some of the luxury brands, which we'll hear from later in this earnings season, but you hear so many other data points that show that the consumer, look at from these airlines, consumers continue to pay up more for more legroom, to upgrade their tickets to first class or business class. So I just think that there continues to be, a divide between those who make a lot and those who don't make a lot. But, I think in terms of the price hikes, McDonald's won't be able to continue to hike prices by 10% if the consumer remains stretched. So something to keep in mind. That being said, if you look at the analyst community on McDonald's, despite the fact that it has taken a hit, I think it's down about 12% over the past 3 months, largely, I would say, due to the concern over these weight loss drugs. Sure. And, the concern that people won't want McDonald's at all, from here on out, doesn't seem to be reflected in the bullishness on Wall Street. Either does weakness in the economy. So if you take a look, 80% of analysts have a buy rating on McDonald's, and the median price target of $315 implies more than 20% upside from current levels. So, seeing definitely some bullishness today in terms of stock price action. Haven't really seen that overall, but let's see as the economy continues to kind of cool.
Close
here,
out those calls.
And people continue to take these weight loss drugs.
Flight to Florida and a Happy Meal, Tom.
There you go. Still off nearly $40 from those all-time highs that we hit just 3 months ago.
Not the best time
so
to close,
definitely
but
under pressure.
did break.
Negative on the year now, too, by nearly 2%. All right, thanks to Caroline Wood, Senior Markets Correspondent here, breaking down the McDonald's earnings. But now let's bring in Alex Coffey, Senior Equities Contributor here.
Got a double top, we got a double bottom.
Alex, when you look at this market,
consolidation.
It's been choppy. We've been weak for the last couple months here. Implied volatility levels elevated at this point. If you take away the Magnificent Seven or Elite Eight, if you look at a chart of like S&P 500 equal weight, that's down 5% on the year. So valuations have come down for the overall market, but you throw that Magnificent Seven in there and it kind of skews it a little bit. But what's your take here on the correction territory that the S&P 500 got into?
I think you're dancing around it right now. I think we've started to see some of those big tech stocks, the Alphabets of the world, pull back, the Metas of the world pull back. The Teslas of the world pull back. Tesla's under $200 a share. Yeah. This thing was $300 at its peak just this year, just below. I think it was $299 or something thereabouts. And so started giving back not just a piece of its rally, it's giving back half of its rally off the near $100 low, but it's giving back a third of its value. These are big moves in big companies. We saw Alphabet. I like to kind of talk about things in this context. And I said this on Next Gen, when it was down like 9-10% that day, you're talking like $150 billion in market cap range. You're basically in value just eliminating Starbucks. Right. To put it in perspective, we think of Starbucks as a big company, a successful company, as we should. But market cap wise, that's effectively just how much Alphabet
was a little stop hunt maybe.
Was just disappointment in cloud. The rest of the report was really strong. Yeah. So it goes to your point, Tom, which is valuations got very stretched in some of these big tech firms. They're the most important firms, but now the bar is just too high.
I like that point, though, Kevin, because if you think about it, the way that you saw the moves in Meta Platforms, Google, Alphabet, into those earnings reports, they were putting those high valuations on. They were basically setting them up to, you better hit every metric, guide higher, or you're going to get punished for it because the market overvalued you going into those results.
Yet, they didn't punish Amazon when their cloud numbers came in light, only because that massive money-making machine, revenue-making machine in their e-commerce did so well. But yeah, this is a earnings season full of winners and losers, and the Magnificent Seven have kind of sucked all the energy out of all the other stocks. What, 493 other names? It's an incredible. I mean, this is. What would you have thought the odds of the S&P being up 0.8% with everything going on in the world ahead of this week? That's a likely rally in these stocks today.
But as you mentioned, going into a weekend where everybody is a little bit more uncertain, that nothing expanded as far as the Middle East goes, Russia, Ukraine. That's still in the backdrop, and I think, Alex, do you think the market's kind of overlooking that we are going to get some resolution to some of the geopolitical uncertainties, which are going to help our markets because of the way that they pull back a little bit?
Well, I think
I manually stopped it. That's why.
Elevated implied volatility, one goes to kind of the high stakes of this earnings season, but really just the almost unquantifiable stakes of some of the geopolitical tensions. So, while it may not be the highest probability event that it spirals into something of some sort of worldwide conflict, it's a probability, and because of that, it's tough to know, what that would do to not, of course, only financial markets, but we're talking about financial markets right now. It's led to this steady, assured increase in implied volatility in the near term, as well as the medium term as well. You've seen VIX futures basically pace spot VIX as well, and it's a pretty flat curve, going to show, in my mind, that we don't really know how to quantify this, but we know the risk is higher right now than it has been the last few months, and as a result, option premiums reflect that. And so some of this has to do with earnings, some of this has to do with Fed, but a lot of this has to do with the fact that there is added geopolitical risk, not just in the Middle East, not just in Ukraine, but also the U.S. and China, and they're sort of bickering constantly back and forth and worldwide.
Remember, we got weak Friday with good economic data early in the morning, and then we turned jittery by the end of the day Friday. So on pretty good. So maybe this is part of that.
Yeah, it still feels like this is a sell the rally type of move in equities at this point. But Kev, you mentioned one of the data points that you're focused on, but we still have a lot of earnings. Beating on EPS, that's an over 75% beat rate. But you look at revenue, it's about 50-50, and that's a concern with the S&P 500 at these valuations.
You can't raise prices forever,
on
and you
AMC.
can't cut costs forever. Eventually, that divergence in earnings per share and the overall other health of that company is going to run out of gas on those two ways to increase earnings per share. Now, still happening, right, across the board. McDonald's right there, right? Another beat on earnings per share, but a higher prices covering lower traffic, and it's a lot of it. We saw that at Home Depot. We saw it at Lowe's. We see it a lot of these places. So, this market's getting. One thing I talked this morning about with Oliver is this market is getting so much thrown at it right now that things get disjointed, and the market's trying to figure out what part of that's good, what part of that's bad. There's a lot of things to consume and digest.
Yeah, but if you saw the McDonald's, and we just talked about it, the McDonald's move into that earnings event, I mean, it's down nearly $40 from its all-time highs, and these are pretty good numbers. That kind of reflective, Alex, what the market's expecting. Look at Apple. They report this week. It's down, 14% from recent highs. It's in correction territory also.
Yeah, I think that there's areas of the market that have reflected more pessimism, and those ones have breathing room to surprise to the upside. We've seen that. I think McDonald's the most recent example of that. But I also thought, going into this earnings season, one of the things that we might see would be margin compression. So far, that hasn't been the case. Now, granted, we have a lot of retail names still on the calendar, a lot more discretionary names still on the calendar, but thus far, margin expansion has actually been this theme, and that explains the kind of lukewarm revenue figures that we've seen and really, really robust earnings. So companies being a lot more disciplined with cost management this time around.
The year of efficiencies.
Apple's chart looks like Ozempic affects iPhone sales.
Maybe it does. Maybe some weak data over in China too, but yeah, you might be able to throw that into everything.
Oh, it's Ozempic. Yeah, it's Ozempic.
That's right. All right, coming up after the break, we're going to take a look at Caterpillar, the heavy machinery industrial giant, has seen its stock fall by about 11.5% so far this month. They report quarterly earnings tomorrow ahead of the opening bell. Fast Markets coming right back.
Spy coming down here. Getting stops on both sides. Could have waited for a better exit, I guess, but well, a little green on it still. Maybe not. Probably overall I was. I did take profits up here. Probably wait for VWAP to break since we are just now trading in a range to get puts. But really, realistically, you'd want to break of this channel here for a more confirmed move. Put that one there a little sooner. A little earlier shot for a short. Don't blame me for the lines, you blame the choppy price action. VWAP. The VWAP's been flat most of the day today. On VWAP. And let's see.
The math on that would target around, let's call it 230 or so on the downside and upwards of 252 or so on the upside. I wanted to give this a little bit more cushion beyond that, and then with the sort of recent trend of outperformance to the downside, I gave it a little bit more cushion below to the downside. And so what I looked at here was selling the 225 put and the 255 call, and then buying $5 wide wings. We're able to collect $1.25 on this. That would be 1/4 the width of the strikes, creates a 3-to-1 risk-reward ratio, which there in itself illustrates that it's a relatively high probability of success, but it of course has risk. That risk is 375 for a max profit of 125. This is a strategy that looks for a quiet earnings. We don't want to be reading about the big story headlines that Caterpillar made tomorrow with this. You want a quiet, smooth report. Has some positives, has some negatives. The street doesn't really know what to do with it. That's your best case scenario. But one of the things I like about the Iron Condor, is selling it in particular, is it's naturally contrarian. If you get a down move, you're going to be bullish this stock come tomorrow morning. If it goes up, you're going to become bearish this stock tomorrow morning as well. So naturally ebbs and flows with the price action. I think that's always made this an appealing type of strategy for that type of trader.
Yep, selling 2 out of the money verticals, one on the put side, selling the 225 put, buying the 220 put, and then on the call side, selling the 255 call, buying the 260 call. You mentioned the risk of $375, but your break evens, Kev, on this one, 223.75 on the downside, 256.25 on the upside. Probabilities of finishing on the money on both of those short options, over 80%. So that's why you're probably
on both sides.
Yeah, that's why you're not collecting as much premium, but you're outside of the 1 standard deviation moves on this.
Viewers, get your pencils out. High probability, risk defined, collecting theta. And the trade-off that you just mentioned is, because he went beyond the expected move, you collect a little bit less premium, so he's right at $1.25, $1.26 in that range there. So this is the trade-off. If you want more premium along with more risk, you would move those strikes in. If you want to be, if you want to play the high probability game, this is how you do it. You move, you figure out that expected move, go outside it.
One more thing I'd add to that too is you can only do this by selling both sides. If you were just selling one side and you went this far out, you're going to collect about half of that or even less depending on which side. And so there's always trade-offs, which I think is the point Kevin's making, which is the more directionally biased you want to be, maybe the more risk you have to take on that side. If you want to be neutral, you can maybe get a little bit further away, but how far away is going to be a function of that risk-reward ratio.
Yeah, and when looking at this, guys, you're collecting $1.25, right? You got $375 in risk. When you look at something like this, say it opens up at $2.45 or $2.50, and it contracts to about 50 cents as a whole, or maybe it goes up and tests the short 255 strike. Do you take off half of it if the market's open, liquidity is provided, and then wait for it maybe to pull back or something?
I think it's going to be unique to each investor how they're going to manage their positions. What I would say is I typically would have in my mind a level of profit that I would be comfortable with taking this off tomorrow, be that a function of a percent of the credit received or a direct dollar figure, $30, $50, whatever it may be. And I would have that going in, but I also think it depends on the move that you're given. If this thing is testing one side and the other side goes to essentially worthless, you're just taking undue risk that you don't need to. You would take off at least the untested side, or at least the short option on that side, I think, in many scenarios, and then you'd make a decision on how you want to manage the other half.
Yeah, the goal is both of those short verticals go out worthless, but we all know that maybe you just take profitability if it's still contained within those break-evens if that market's open and liquidity is provided. So keep that in mind. All right, thanks to Alex Coffey, senior equities contributor here on the network, for joining us. But coming up after the break, Kevin and I are going to be joined by Andy Swan from Likefolio for discussion on Pinterest and the sentiment data on the stock moves.
Tomorrow, employment cost index at 8:30. 9, we have home price index. At 9:45, we have Chicago Business Barometer, PMI. And at 10, we have consumer confidence. A little data tomorrow. Wednesday's ADP employment, job openings, ISM manufacturing, construction spending, and FOMC. So big day on Wednesday. Big day. What's up, Trays? Okay. Alright, see if we can break this channel. If we're still just chopping here for a bit. 12:30, our chop hours. Prime chop hours. Market's been building liquidity pretty much since open. Given we've had some nice range though. A complete chop. Had some channels being respected. But not great. No continuation either way yet. Still holding it even though it got taken from you? Nice. Yeah, you should be hearing stuff though pretty soon, right? Next couple weeks. You know for certain. For certain. More for certain. That you have nothing of value. Or that you do. Or that you did, and now will be some new value. Yeah, when's your deadline where you'll know? What's up, Riley? GME's down 2.5. He's up 7. Or for reissuance of shares, or just a payout in a private company. All right, see if we break the top of this range. See if we're actually going to break out of this liquidity. See if it can be done. Can it be done? 1230. Not so fast. It's there. Want it? Okay, I got some calls. I don't know. I like it. I just be early. Could have waited for that candle to close. Would have been a little more prudent. Just getting jumpy. You got this volume too. Yep, maybe falls. He's so choppy. So choppy still. Super trappy, so 15 heinies? Whew. That's a lot. That's a lot of beer. 16 quarts of jambalaya? Dang, dude. Better take it easy. Take it easy. Trappy. Yep. Well, GME, it's going down. Coming back to some more realistic valuations, I'd say. Post squeeze in a high interest rate environment where checks are not being mailed to people anymore. Or zero work, but to stay at home. Buy things. Is it a double trap? Is it? I think it was here. They closed that call. Bad timing. Trap one more time. Look, we're right back in the same spot. BWAP is probably gonna be good for puts. Break this, I'm getting puts. Still have to add a leg. There's VWAP testing. Jeez. We tested both ranges right here at the end of the wedge. Breaking both of them. Whee! Push past 10, then taking a close. Some like consolidating on that thing for half a month. Getting close to flipping here. Careful these fake out candles. Yeah, I flipped. Dang. Hate doing that. If it's the right decision though. Ugly. Ugly decision. I think I flipped if I did that right. I've never done that on Fidelity. Did not fill. It filled. What? Wait, what happened? No, it didn't do it right. Gave me calls? I've never done that on Fidelity. Oh, it just gave me lower strike call. Oh my gosh. Well, we're back at this lower support now. Maybe we'll bounce here. I don't know. That is so bad. It closed my one strike and gave me lower strike calls. Didn't change it to puts. Dang it. Okay. I guess I didn't. I don't know. Yeah, I guess that was probably my mistake. Okay. I mean, it would have been... did it work? Did I get more calls? Didn't fill. Why? Yeah, I'm canceling all this. That was an expensive lesson. Still haven't closed out of these. Cash. Here on this account. Out of buying power on the other one because I chopped out twice. This. No continuation. Then when we get the continuation on to Fidelity, we're going to deal with garbage. Garbage. Burning all my buying power, having to get in and out of these. I mean, this is what I'm gonna take a profits on anyways, and I'm just chasing it. Yeah, I would have taken some profit here for sure. I'm just backing this chop. Alright, I'm gonna take a break.
$33.8, that street was expected. So overall, Meta's spending seems to be not as high as expected. Is it as simple as that, George? We watch Meta and we watch their spending. The more they spend, so goes Meta, so goes ANET.
Yeah, so a couple of things. One, if you look at media and entertainment, the demands for broadband are extremely high. Artificial intelligence, also another area where there's high demand. But I think there is some concentration risk that you bring up, Kevin, that you should consider when looking at this name. The other thing is looking at the ratios now. In the last year, earnings growth was actually higher by about 65%. Their estimated quarterly adjusted earnings growth is around 25%. So that might, again, play out based upon some of the lower demand inputs from Meta platforms. But at the same time, sales is still robust. They're coming in around 25%. The estimates for the 4 quarters on a forward basis are 29%. So, they're already guiding, I think, a little bit lower than their historical 4 quarters. Plus, the forward 4 quarters are relatively let's call it conservative compared to their trailing. But again, if they denote some weakness, primarily for Meta platforms, this could be a situation, despite the profitability profile of the company, we may end up seeing some weakness. So I think it's a cautionary issue that you have to be concerned with when looking at this company. But nonetheless, like I said, the profitability profile is actually very robust considering it's a hardware-centric company.
Yeah, and it's not just Meta Platforms. Microsoft's also one of their big clients also. They had a pretty good report. All right, thanks to George Tillis, Senior Markets Correspondent here, breaking down Arista Networks ahead of earnings. Kevin, option markets pricing in a pretty hefty 9% move either way in the stock. I mean, like I said, it's had a good run.
Yeah.
It seems like every time I look at a stock like this, it's had a good run. In this earnings cycle, there's some outliers out there that might send the stock lower. I mean, you saw it. Cisco got downgraded today. You've seen it in other names that have done pretty well where, hey, maybe it's some profit taking, maybe it's the outlook or guidance moving forward.
Maybe the remember, deceleration, and you have to go back to their customers. Yeah. And if Meta is not spending as much money, that's who they spend it on. And so, the article I read, the research I did, talked about this stock is all about Meta's spending going forward there and that relationship.
Yep, that's going to be a big key one for this supplier of cloud networking solutions. But Kevin, I looked at a strategy here. Implied volatility pretty elevated into this, just below 52-week highs going into the report. The RSI down near the 40 level, so getting close to oversold. So I looked at something a little bit more conservative in here, where if you want to take a directional bias, in this example I'm using a neutral to bullish type bias to take advantage of that higher implied volatility. I went out to the November 17th monthly, so not a pure earnings example, giving myself about 2.5 weeks in this one, and just selling an out of the money put, the 165 strike put, and then buying the 155 strike put. So a short, neutral to bullish $10 wide put vertical, collecting roughly, I think we've got 230 credit there.
That is super aggravating.
It's trading closer to 250, so you'd be able to collect
I think it was my mistake, though. I don't blame myself, I guess.
Here in the risk profile, but if you collect 230, takes your break even down to 160.
My brain wasn't born in the 50s to understand Fidelity's brokerage.
Let's compare this to what Alex did on his Iron Condor, right? Because this is a half an Iron Condor.
Like trying to trade while reading a newspaper.
But it's also different in
talking on the phone with a broker.
The one-day expected move is $16, right? The move out till November 17th is $21, and you're about $10 below the market. Well, what does that equate to? Well, you put on more risk. You move that short strike.
So I got the calls here on this break.
You
guys were paying attention.
More premium.
Held it all the way down here.
Right? There's the trade-off.
Like, okay,
that's what we
we'll bounce here and do this again.
All the time on this show. You're only doing half.
Which I guess I could have stopped here sooner. That would have been.
But you moved it closer, and
yeah, it's probably better. Anyways, quite a bit down on that. The break here, like, all right, good. I'm flipping, closing the calls, buying puts. This is the break I want to see.
It's all about managing.
Right.
This is one-sided.
But realizing this loss, open another one. Rips down here, as you saw, or just flushed or whatever.
This is the learning part of this segment, comparing this one to
and then
Iron Condor.
By the time I can see on my brokerage, it's still showing me calls.
I look at the results from like Texas Instruments.
And I have to go over, click a few buttons,
significantly today,
see the history.
And these
And
stocks were having
it closed the 1440 calls and opened me up some fresh 1430 calls on this break right here.
Type play. If you're more neutral to bearish on a name like this, then maybe
yeah.
you're selling
Maybe I should just be having calls. I think that's the sign.
That short 165 strike
Given
put on
the
this
brokerage
one,
is so slow and
that's about
clunky that I probably wouldn't be able to
65%
even take much profits down here by the time
which
I
is what you want,
could
a higher
click all the buttons in
probability.
time.
That break even 162.70, as Kevin mentioned, that's about $13 below the current share price in there. So you do.
So
have
yeah,
that
I'm back.
cushion
I'm ready
to
for
the
calls. I think I
downside.
should just be
You
in
do have
calls.
risk on this one. It's $10 wide. If you collect 230,
Closing one strike to
you've
open up
got
another one.
about $7.30
On a break.
$7.70 in risk, or $770 per spread on this one, Kevin. So when you look at the risk reward on this type of trade, you got decent probabilities, but you've got a lot of risk in this one down below 155.
Should be aligned with your opinion in the underlying, right? Alex didn't have a strong opinion either way, but he thought the stock might move. Yours is more of a bullish opinion.
Yep, 200-day moving average just below 162. Maybe that acts as support there. But as I mentioned, not a pure earnings play on this one, because you've got a couple weeks, 2.5 weeks in this position. So even if it does fall, you do have that time element that could rebound. We've got some assignment risk on that short 165 strike put also into expiration over the next 18 days. Kevin, we got about a minute here. When you look at the markets, I think there's a lot of things that investors should be focused on. It's almost overwhelming at this point between data, earnings, geopolitical risks, and other outliers out there for the markets.
Yeah, sometimes data comes at you with a drip, drip, drip. Sometimes it comes at you like a fire hose. It's coming. It's so much that the market gets disjointed trying to figure out what it is. But here's an interesting thing for our viewers to think about. This week, especially Wednesday, Tom, might be a day where this Treasury refunding announcement takes the headlines away from Jerome Powell, because that's so important, and Jerome Powell is expected to leave interest rates unchanged. And does he have to talk about the Treasury refunding? And so I think that will take over some headlines, and that's not a normal thing for us to say, right? That's something like this, because supply of treasuries and the need for the money is so important now. And so without a Fed buying, it could get a little interesting.
During the Fed meeting, a rate hike's not expected at this point. They're on pause. Maybe they should get those lag effects through. Is he hawkish, or is he middle of the road, or is he a little dovish during his commentary? I think that's what people are focused on.
Well, he's not going to pause, or he's going to pause. So I would expect him to lean a little bit more, but he's starting to say things like, high for longer, we're here, and we're, efficiently restrictive, things like that.
Yep. Definitely a lot to focus on this week, and we'll be covering it on this show. All right, that's going to do it for Kevin and I today here on Fast Market, but stick around right here on the Schwab Network. Next Gen Investing is coming up.
Okay. Breaking this support. Ink. Puts. Got a little head and shoulders maybe forming. We test on VWAP. We did the break and then just did a little liquidity pump. It looks like. Looking for a gap fill. I'm pretty frustrated already, so thankfully I'm almost out of buying power, which kind of sucks though, because down at this point after that stupid mistake. Big economic data this week. Don't need to get any home runs today. I don't know if I actually have any buying power left. Yeah, maybe.
Look at McDonald's for FOMO. Of course, one of the largest names I can remember reporting earnings on a Monday morning, so I'm excited to talk some McDonald's. Big numbers out of there, and of course, some previews to close out the show in Pinterest and a recap in SoFi with George Tillis. So very earnings-heavy show, Ben. Not to be kind of surprised by. We're about halfway through the S&P 500 earnings we came into today. Still means half of them to go. Apple, of course, a big headliner on this week. You got AMD tomorrow as well. So tons and tons of earnings once again. But what's to upvote, downvote? They're not endorsements. They're not recommendations. We're going to look at 4 of these names, 2 of which we've heard from earnings, 2 of which we're about to hear. Let's start with a name here on our list that we've already got the earnings. And it's actually been a pretty nice response thus far. We're talking Western Digital. Right now, Ben, the stock up just under 6%. So it appears, you'll go through some of the numbers with us, the street likes it.
Yeah, it does seem to be, right? I mean, up by 5.82% here now as we speak. Shares of WDC Alex spiked this morning ahead of the cash open in reaction to the quarterly results, but we're kind of limited in terms of follow through since. Now, again, a big gain here, still up over $2, $2.25 225 right now, but limited in terms of follow through after that initial spike. They were up around 10%. So we've been kind of grinding lower, basically giving back half that initial move up. After better than expected loss, EPS came in down $1.76 a share. Analyst expectations were for a loss of $1.88. Revenue beat at $2.75 billion. They were looking for $2.67. Second quarter guidance came in at a loss of $1.35 to a loss of $1.05, and they're looking for revenue to come in 2.85 to 3.05 billion. Now, Western Digital announced its board of directors unanimously approved a plan to separate its HDD and flash businesses. Alex, they determined that this is going to help them realize their full value. Spinning off the flash business is the best alternative at this time, they said, and the current timing for implementing that standalone separation strategy is advantageous in efforts to create shareholder value as industry conditions improve. I looked at the chart. Not a lot of conviction one way or the other. After the initial spike up, we've been kind of just grinding lower, but also on the bigger picture, you're going to see this playing out. Look at it behind me. You can see shares have been holding above the 50, kind of pinched below the 200-day moving average here, but holding, again, right around and just off that October high that we saw up around 47. So a test above that, the highs from earlier this year, but limited follow-through, and you can see how we're starting to roll over here.
Yeah, it has been a little bit better year for Western Digital than recent years, but still, obviously, some question marks. It does seem the street really liked the announcement of the spinning off and separation of the businesses. Something that stuck out to me and something that I had seen, improved pricing, better inventory, and tighter cost control drove sequential margin improvement. I came into this earnings season thinking the story was going to be margins. A lot of companies, are they able to pass those costs on if they are dealing with cost pressures? And then are there companies that are going to be able to tighten up their own costs, drive some of their pricing down, and then of course be able to have expanding margins. So far, thus far, margin expansion has been the surprise. A lot of EPS beats, a lot of inline revenue. So we'll see. Big number though out of Western Digital. Split news maybe the real headliner there. Okay, this is a big move now. Let's talk some on semiconductor, because this is disappointing to see this stock basically having a bear market here all on its own, down almost 20%.
Yeah, another recap here. Look at this, down 19.5% here as we speak. Shares are lower in reaction to the news this morning. Alex, today, they traded within $10 of the year low from back in January. That's down around 60, so something to keep an eye on if this selling continues. Now, they reported third quarter adjusted EPS at $1.39 a share. That beat. They were looking for $1.35. Revenue also topped what the street was looking for at $2.18 billion. Analysts were expecting $2.15, but guidance was not what the bulls wanted. They see fourth quarter EPS between $1.13 and $1.27 per share. Revenue in a range of $1.95 to $2.05 billion. This stock has taken a hit, Alex, after it topped out in July up around 111, 112 on semiconductor shares. No stranger to vol, though. They are quite volatile, and over the last year have had 14 moves greater than 5%. Taking a look here at the stock, you can see it's coming under pressure below the 50, below the 200-day moving average, and there's that low I mentioned from this spring. Keep an eye on that, and if we take that out, it'll be back to the Jan lows, potentially down around 58.
No, I'm just kind of eyeballing this, and obviously it's not perfect, but Ben, I guess you're looking for a silver lining. Of course, you can't really if you're an investor in this. It's a tough day. But it's kind of just back to on trend. In some, I know it's a little bit below that, but you're giving back 6 months of price action. It's not like this is making a new all-time low, but notable. Down almost 20%. Absolutely. You're going to shock and you're going to make headlines. You talked about the guidance coming in a little bit weak. A semiconductor name that has strong ties to cars, autonomous driving, and things of that nature. Disappointing here today. Next on our list, though, the next two rather are both going to be earnings previews. We got Arista Networks on our minds now. Ben, ANET is the name. A company where growth is always in focus. We'll see if they're able to meet the mark.
And a stock that's structurally in a similar position, Alex. Shares of ANET pinched between the 50, the 200-day moving average off the year high in August. They were up around 198, and EPS is expected to come in at $1.58. Revenue $1.48 billion. Last quarter, they reported EPS $1.58 versus estimates for $1.44. So a beat last quarter. Revenue last quarter also topped at $1.46. Analysts were looking for $1.38 billion. Now, I did notice shares of Arista fell last week on 2024 capital spending guidance from Facebook, parent Meta Platforms. Wednesday, the company said they expect to spend a range of $30 billion to $35 billion. That was below consensus. The analysts were looking for a mid-range point of around $33.8 billion. Meta, Microsoft, the biggest customers of Arista, they sell computer network switches that speed up communications in internet data centers. So again, another stock that's been coming under pressure off recent highs. You can see the stock, or the chart behind me, a bit of a double top recently before some of these declines, but still in this longer trend up.
Yeah, excited to look at that one a little bit closer too with Rick. It certainly seems that you can, depending on your time frame, paint a lot of different pictures with this one. So we'll look at ANET. We'll also look at the next one here, which is First Solar, another name that we're previewing here for earnings. Ben, expected tomorrow. What are we looking at here with First Solar as the stock? I mean, you could be forgiven for thinking maybe the earnings were already out with the stock down 5.5%.
Yeah, it's been coming off, Alex. This is one a name where the sun's been setting on shares of FSLR for some time now. Lower after topping out in May this year. It was up around 232, below the 50, below the 200-day moving average since the end of August. And the selling really accelerating ahead of the news due out later today. EPS expected to come in at $2.09.
Liquidity building is crazy.
Looking for 900.19
I got calls. Oh, I did.
Million. Now,
Broke the channel.
last quarter they saw revenue of $810.67 million versus expectations for $720.43. Now, EPS last quarter, $1.85, also topped 95 cents expectations. Now, driven by strong bookings, they ramped up production, their Series 7 modules.
It's a really
backed
break.
by overall solid demand for the solar market. They also
Those
had an increase in their
though.
module
Or we
average
could
selling
still be
price,
stuck
the
in
ASP
this.
in the third quarter revenues. Investors
Liquidity.
desperately looking for a bright spot in today's
It's 10
results.
after
So
1.
September
There's a
down
gap down
7
here,
of the
so there's
last 9 weeks, Alex.
Yeah, pretty tough trade for FSLR coming into earnings. We'll see if they can change the tone, though, Ben, with those earnings. Neither one of these two names, strangers to volatility, with over 10% being priced in for a possible move, a 1 standard deviation move by options in First Solar, and nearly that in Arista Network. So we're taking a short break. When we get back, it's time for the Chart Master. Rick's going to join us. We're going to look at both those names ahead of their earnings. Ben's sticking around. We'll be right back.
Liechtenstein. Wow. None of these are being respected. Downside of the upside. Here. kidding me, guy? Got us straight on the river. Didn't even have the flush. Thought you for sure had the flush. Wow. Pocket nines, dude. That was not a good call. He played that terribly. Just got very lucky. Yeah, you better leave. Chips in a row. Alright, spy. See if we get any kind of continuation. Running out of accounts to money on, just for buying power. This one on Fidelity cost me a lot because those were large contracts, a lot of them. Okay. And then this one, this break right here, that was a lot. So my trading account made money on it, but it just closed it out because job. I need to get one of these on margin, so this isn't an issue. It's annoying. Yeah, there's Jappy.
That one. Okay, looks like a max loss of 75 on this trade. It's not the only name to keep an eye on here today in terms of earnings, a potential big mover. Let's bring it over to Rick again. He's got his eye on First Solar as well. Rick, a couple key levels. Some of the selling noted. We were talking about it earlier, but talk to us about what you're watching here in terms of this chart. As you can see, again, a bit of a resistance up around 232 and some of the weakness that's ensued since.
Yes, it's an interesting chart. Some big swings, big gaps, centered largely around earnings as well here. We've seen some major fluctuations here, but really things have taken a turn to the downside here. We're down like 41% from those highs that you mentioned near 232. No M shape this time as well, kind of like this here. We didn't have the same crossover to support. That was something I thought was interesting here, is we had this gap up. We never really filled it until mid-September or so. So that gap held true for quite a while there. But once we gave up the gap, once we also gave up our purple 252-day EMA, we kind of made another leg lower here. We did find a little bit of stabilization around the 143 mark. You can see back over there, that was some lows that we hit in late December, I believe. And once again, once we fell through those, we had a rather energetic break downward today. So we had a very rather steep trend line here. We kind of drifted to the side through it, though. We didn't get a big upside breakout. We did make some upside movement, but we failed at that yellow 21-day EMA a couple times. Then our trend line wound up being supportive here. So old resistance can become new support. It's always worth keeping an eye on things. If there's a trend line that still has a chance of coming back into play, you might as well leave it on your chart, because it often comes back into the mix.
A big move lower here. You can see with these big red candles to the downside, the breakout out of that balance Rick was just talking about. This is a high conviction trade in line with the trend that we've been seeing, again, off those tops you saw earlier this year, this summer up around 220, above 200. So conviction associated with this move to the downside. I'm curious to see what the RSI, what your momentum indicator is looking like on this one, Rick.
Momentum is kind of similar to our last chart here in that we've been struggling here a little bit. We've been in bearish territory for a much longer time, but even though we're making some downward movements here, we're staying just above that oversold area. So any
hope for the bulls.
Still a little bit of hope, but any little move downward further than we've already gone probably will trigger that crossover here. The important thing is to wait for the close. See if it closes below that area. Intraday fakeouts are common. They happen frequently here. You can see crossovers around that area, especially on a day where there's some volatility.
It could have been
so
very green.
Wait for the close. Wait to make your trading decisions based on when the indicator completes its movement for the day.
So after a big breakout like this, Rick, you get again the conviction to the downside, the move we just talked about out of balance, an initiative move lower in line with the trend that we've been seeing. I'd imagine you have some areas of support, some resistance areas that you should look for to see how accepting or rejecting of this recent
Why is this different now? This candle move?
Yeah, I included standard deviation channels on this chart here. We take our blue linear regression line of best fit based on closing prices. Then we extrapolate standard deviations above and below. -1, -2, -3 to the downside, for example. The -2, and once we include this, we can see that it lines up pretty well with that 143 level. So that's kind of an extra important area to watch now. That's potential resistance if we are able to make our way back to the upside here. Beyond that, right here, we've got our yellow 21-day EMA and our volume profile point of control right around 152. So that could be another area.
We're making the head and shoulders on the intraday here.
That's why this study is useful, because it helps project potential support areas when we're making these new lows and we don't have previous recent price history to go off of. That one comes in right around 121. So that would be another leg lower for sure. Not saying that's a guarantee, certainly not any kind of prediction or anything like that. This is just where we might be able to extrapolate potential support based on our own price history here.
Okay, so we're talking about 121, a potential area of support, but we have stopped around 132 here today, currently trading about $3 off that low. That's Rick Ducat joining us here, helping take a look at technicals, some key areas to watch on a couple names we're watching and taking a bit of a deeper dive into today. Alex is going to trade for solar here. You just saw how, again, some of the weakness that Rick identified here. I'm curious how you'll approach this one.
Some weakness today as well, as we talked about, down over $8.
Bullish if it breaks that right shoulder like it's doing.
And it doesn't always work this way, but Rick talked about that bottom standard deviation channel around 121. Well, market maker move right now is around $14. It's a $135 stock. That gets you to 121 as well. We know those aren't guidelines. We know those aren't target prices, but we do know that that's what option prices are pricing in for a 1 standard deviation range. I looked at selling an iron condor, looking for an underperformance of that standard deviation range, and we are centered around that 120 or so level, just below 121 on the downside. Selling the 120,
next resistance
414.26, and then alongside it, selling the 155, 160 call vertical. This creates a $35 wide window in which this thing can be at full max profitability by the end of the week. Collecting $1.25 means $125 in max profit on $375 in risk. And you can see, Ben, the shape of this is like a plateau. The more in the middle it is, the better. It's more likely that these would expire worthless, but as long as it's out of the money, we'd anticipate these would expire worthless going into Friday, going into that expiration, and that's the best case scenario. So looking for a limited movement. If you were doing this type of a strategy in any name, the best thing you could hope for would be wake up and hope that there wasn't a big headline made, because that's more likely than that probably the stock isn't moving a tremendous amount.
All right, well, it gives us something to keep an eye on in terms of two names that we're going to further our discussions, our focus on. Again, our two upvotes here, and thanks to Rick Ducat, the chart master, for helping us out with that. And Alex will continue to watch these trades. We're going to take a quick break. Stay right where you are. And when we come back, we're going to take a deeper dive, look at a couple names to keep it.
McDonald's next. Still rallying here. Closing a couple more there. Gotta keep closing. You gotta keep feeding the beast as it goes up. Keep it happy and hungry and metabolism moving. Hi there, an AMC up 7.5. For a high day test now. Up there. We'll get rid of more of these lines once we fully break through. This one. Broke that one. Oh, high day is 415.35. Diamond came out. Order 5 clicks, 2 buttons, 18 presses. Closed a couple more there. Click, click, clickety, click. Triple X square, double down, circle, Y, Y. That gets me out of 1 contract.
For Apple here, this event is going to be online only, and it starts at 8 p.m. Eastern time. So just given the time, it's not going to be a major event, but an event nonetheless here. Now, this is themed Scary Fast, so that is also signifying that they may be unveiling their M3 chips, which would be a very critical component for their potential unveiling of the new iMac computers, or a new version of that, and potentially even a Mac Pro unveiling as well. So that's really what the market is really focusing on at this point in time. Now, the M1 chips actually were released in 2020, trying to break away from Intel, and now they have been able to develop and improve the design over the last couple of years, and hopefully this is going to be able to maybe spark a little bit of demand within the PC business. We have seen Mac sales starting to decline, and we've seen overall weakness within the PC market also declining. So hopefully this kind of provides them a little bit of a boost in sales, and that's really what we're going to be focusing on. They may also unveil some accessories, especially highlighting the rollout of the USB-C charging adapters and things of that nature. I think the main focus is going to be on these M3 chips that will potentially be unveiled today.
Close.
It does seem to be a little bit of a
kind of
double entendre with the phrase there with Halloween here on the eve of Halloween. So Scary Fast event, looking forward to that. As you said, looking for those new Mac computers, see if that is delivered for the street. Right now, Apple up about 1%. Kev, as we kind of look at this whole week with Apple in mind, I mean, this is really, outside of NVIDIA, the last of the mega cap tech firms to give us their numbers.
Yeah, I'm not sure how much of an impact it's going to have on the broader market, because we have so many other significant economic data points that are coming out, as well as the Fed. But it is going to be something that we are going to be focusing on. We might continue to worry about the slowing in hardware sales. I think that's going to be the #1 area that the market's going to really focus on. But we could see that being balanced out by the increase of their services business. So very interesting report that we will have later this week. But once again, so much other data that is out there that could impact the macro environment, not only here in the United States, but around the globe, that Apple seems like it's the 4th or maybe 5th most important indicator that we get this week, unfortunately.
And that is very few times that we've said that on Apple earnings week. So we'll see if that becomes the case or not. Barclays lowering the price target subtly from 167 to 166. KeyBank keeps the sector weight ahead of the earnings, ahead of this event. We'll see what happens later on this week. Appreciate it. Kevin Green, Senior Markets Correspondent for the Schwab Network. Bringing back in Ben Lichtenstein here, the host of Futures, who has agreed to step in for the hour here on Next Gen. Still with us here for FOMO. We're looking at McDonald's now, Ben. Like we said, Apple will, later on this week, hopefully not be too overshadowed by other things.
I don't even know what's going on anymore.
One thing's for sure, at least right now, the market is
getting logged out. I'm doing with Fidelity.
McDonald's. And the market itself just jumping as well. We're up 45 now in the S&P.
Yeah,
so talking about
on
McDonald's
the day trade
and where
account.
this rated for you today, Ben, in terms of all the headlines we're going to have this week.
Yeah, Alex, definitely better than expected results here.
This
is a name that's gaining today and holding on to some of the gains that we saw in reaction to the initial results. Investors are definitely enjoying the news here today, and you can see that in terms of the stock price, which is on the move higher. Still holding
I'll just leave you. See if we get a handle.
The 200-day moving average, and still kind of in this range that we've been in. But we were just talking about the Apple event, and it's being called scary fast. It's been a bit of scary past for Apple and for shares of McDonald's. They've come off a bit of a double top. We saw up around this 299 level, and again under pressure here. Recently down to as low as 245, but the numbers here this morning again potentially reversing some of that momentum lower here.
Yeah, no doubt, and just trying to look too with the market making such a notable move. If I could find any catalyst, I don't see one here on my initial looking, but if we do find anything, I will provide that, of course. McDonald's making a nice reaction here. We talked about this a little bit on Fast Market as well. You have to wonder too, Ben, how much are some of these moves lower allowing for some of these names to breathe to the upside? There wasn't really much of a pullback in a name like Alphabet leading to the results. It leads to that 9-10% decline. And what I think most, if they would have had that press release, seen those earnings, maybe wouldn't have assumed it would have been that kind of response. It was a pretty strong quarter, all things considered. But McDonald's up 2.2% here today. Not setting the world on fire by any means, but stopping the bleeding after what's been a pretty rough few months for McDonald's investors.
Absolutely. One of the big concerns, Alex, obviously, in this environment is the higher rate conditions, but also we've been talking a lot about the wages component, right? Labor being a major factor, especially for a big name like McDonald's. And I think that was one of the areas where it came in a little bit better than expected. And so again, kind of furthering and sort of adding to some of that momentum to the upside. One of those big areas where we could have seen concerns continue to broaden ultimately didn't really come to fruition.
No doubt, and looking at the numbers in particular on McDonald's, of course, beat top, beat bottom line, same-store sales increased healthily. So much for
still
those
down pretty
diet,
large.
drug trends making a major impact. We aren't seeing that quite yet, at least in the case of McDonald's. So another name to watch as we go ahead. They want to talk about sort of the analyst commentary. We know that they pour in after we get these results. Of course, we got a slew of that here today, Ben. Basically, all the names or all the analysts that I saw weigh in on this either have it in sort of the neutral equivalent rating or buy equivalent rating, and that is the same for the entire street. You got over 75% of analysts in the buy camp with just over 20% in the hold camp. Average price target around 310, so certainly looking for a retest of those levels to the upside. As we start thinking about this one, Ben, we start thinking about trading this name going forward and start talking about levels and stuff to consider. When you're looking at McDonald's now, you don't have earnings to worry about for some time. It sort of is its sector. I mean, there are other names, of course, that it's competing with, but I don't know how much if a company like, let's say, like Shake Shack or Yum would come out with a disappointment. I don't know how much that moves McDonald's. McDonald's is sort of seen as a company that I think can hold its own in that space. So I guess the long way of what I'm trying to say is we don't have an earnings catalyst for quite some time, the quarter from now. And so as we start thinking about this, technicals can kind of come back into picture and start thinking about this. What levels are you focused on?
Well, I'm going to talk about some levels in a second here, Alex, but I did want to point out some comments that I saw that did come across the wire in reaction to or with the earnings. They were talking basically about how some of the price pressures that we've been seeing and ultimately difficult times have been a good thing for McDonald's. They talked about how they saw a surge 2.4% towards a 1-month high in the midday trade, initially in reaction to the numbers, again, those third quarter profit results where revenue and same-store sales all rose above better than expected. And I did notice here one thing that stood out to me, Alex, was we did see some of the areas where there was one fact, I'm trying to find it here, I'm sorry. They were talking about basically some of the sales growth. Here it is, 3.5% for the same-store sales growth, basically rivaling Wendy's ultimately, and 4% for some of the other same-store sales. So again, these were pretty good numbers considering the environment that we're in. Yeah, basically the company talking about how those numbers came out better than expected.
Yeah, they definitely did. And like I said, I think the market, having sold this stock off largely off its highs into this report, I think allowed for there to be some outperformance to the upside. But talk to me about where we go from here potentially, and what levels, support, resistance, trends, things to consider on the chart for McDonald's, because this is a name, and at least from my perception, that really hadn't tested investors much over the last few years. Performed pretty okay in 2022. Certainly did pretty well in 2020 and 2021. It was one of the first to come back during that pandemic period, and only extended that rally into 2021. A little bit rockier last year, but all things considered, a pretty flat year, which would have been outperforming the market. This year, though, and this last quarter leading into this in particular, was kind of uncharacteristically volatile for McDonald's.
Yeah, and you can see that in terms of some of the price activity. It's come under pressure. Let's pull the chart back up again, how we're holding below the 50, holding below the 200-day moving average. That's what stands out for me most notable. I think it's a pretty good representation of the broader market, but we have come off the double bottom that we placed recently this month, right around the 245 level, it looks like. Recovering some, as I mentioned here, still kind of in this range, but you can see the energy associated with the move lower that we saw into the end of September, beginning of October. Again, Alex, at 245, recently pulling back to the lows that we saw earlier this year, back in January. So new lows for the year, but one thing I'm noticing is follow through is somewhat limited. Again, the real acceleration to the downside is starting to reverse a bit here potentially, so we'll keep an eye for one on the 50-day moving average. You need to get back above 267, which again, as you can see, kind of coincides with the middle of the range that we established in the beginning of the year, back in January and February. And then even above that, you've got the 200-day moving average, which is around 278. But this is a stock that's coming under pressure. If we double top here and roll back over, obviously the recent lows here. One thing I would be looking at is RSI. It's kind of limited in terms of participation to the upside, and I think, again, a reflection of this kind of longer-term trend to the downside that we've seen. Again, looking at a move from 300 here to 245.
One thing that I don't even know that we commented on, but like this was quietly really volatile today. It was like a roller coaster ride intraday. It jumps on the announcement, it falls on the call, and then steadily climbs back here intraday. 263.70, the intraday high. We'll see if we can get back there. But I did have a trade illustration with what we've talked about in mind. No earnings on the calendar for a quarter from now, absent any surprise kind of early releases. I looked at a trade that goes out to December monthlies, Ben. So December 15th is the expiration date. Just simply buying a call vertical. One in the money, one out of the money. Buying the 260, selling the 265 for a 250 debit. Be $250 in risk to make $250 in max profit. 260, 250 would be the break even. You find that by taking that 250 debit and adding it to the long 260 call. Of course, that gives you 260, 2.5. So we have sort of loose guidelines that we look at when it comes to debit spreads. Those, of course, typically are equal risk to reward. We have that, of course, with this trade illustration as priced. And then the break even kind of in the wheelhouse of the current share price. Now, granted, it's about 70 cents higher, but given the nature of course, interest rates, and of course the fact that we have 46 calendar days to expiration, I would say 70 cents is in the ballpark of to that break even in the current share price. It's kind of in that range. This isn't entirely out of the money. So looking for some upside in McDonald's to continue, Ben, post earnings. The stock up $6. Still nothing in terms of the overall market that I can find. I'll check again during the break and we'll update if we find it. But right now, S&P is up 41.50. We're going to take a short break. We get back, it's time for another earnings preview. We'll look at Pinterest, one of my favorite names to talk about. Be right back.
4 o'clock in the
relative to the 50, the 200-day moving average. You're still holding below both of those. You're talking about sell-side activity off the highs that we saw this summer up around 4,600. Recently taking out 4,200. That was a lower extreme of a range that we had been in. So this is not what the bulls wanted to see. Yes, we're pulling back here some today, but still in this longer-term trend down off those highs from earlier this summer.
We'll keep our eye on it. That's going to do it for Ben and myself. Coming up next, we got the watch list. Have a great rest of your day.
Okay, SPY, complete the cup. A little handle even. A break, now we're kind of just melting up a little bit. I did close some calls. I'll have quite a few. I actually reloaded some right here, not a great place. I thought it'd pull back more and it didn't, so yeah. We'll see. I'm gonna try and hold these calls for a while. Do kind of have resistance over here, 415.94. We're getting close to. Maybe forming a larger cup there. Still red on the day. Close another one of these 415s, 414s. All in, baby. That stupid mistake didn't happen. Much nicer. And I shouldn't have held on that break. A false break, and what was that? Everyone have an ace? Hearts. Straight. All I need is top pair. All I need is a bag of weed and lazy Susan. Oh, nice. 10 high. Flush. Congratulations. Name that band. So many red cards and no flush. What did I have? Pair of threes. Everyone's stoked on that. O'clock. High's the high of the day. 1.2%. Pretty big green day. Called that. Parody song from Sherman Brothers? No. G Bang Bang is a great movie though. It's a very good specific guess though. Trying to figure out even what I'm looking for up here to go long or close or just bullish mill. You see some kind of pullback. Okay. Get a lucky break. Like, yeah, raise pre-flop. Can I get 637 offsuit? All in. Definitely got something good. Pocket queens, well done. Good call. haven't seen a big SPY move to the upside in a long time. I guess beginning of the month we had this day. That was a big day. Little inverse head and shoulders there. Gonna bet the kind of breaking the neckline, kind of at the neckline. 2 o'clock though. Let's see. Finally a hand. No one else has a hand though. I slow place a little bit. I do a little re-raise in here. What is he? Does he have a full house? Right. Or 7. He does it. Had to though. Thought he maybe didn't have anything. Then when he called.
Don't think they need to raise interest rates more from here.
And you know, I'll add that Goldman Sachs also sort of gave
I think
for housing
10 times.
forward, and that too was coming in
Shoot.
a little bit.
I don't know if that's good or bad, Dink.
Starts for next year is slumping to the lowest
So you have to
level
on, off,
since the
on,
early
off,
1990s, and
off,
that would drop.
off.
It would be a
Dang it,
decline
Dink.
of over 6% from the projected levels of this year. So
One off every time.
What happened to the Santa Claus rally or the roaring 20s that we were supposed to have here? Any bright spots?
You know, I guess the bright spots are
This guy's
that
voice
the
is
Federal
funny.
Reserve right now has bullets in its gun.
You get a head and shoulders up here.
You know, with the Fed Reserve rate well above 5%, if we do start to have some problems in the future, they do have the ability to lower interest rates. And that could be good for the fixed income market. And that could be a bright spot in this whole thing. For the last couple of years, it's not been a bright spot. It's been one of the worst performing parts of the economic environment for years. I think it's at a 45-year low bond. But for the first time in decades, 40 or 50 years, you can actually buy fixed income, lock in higher yields, and use it as a potential capital appreciation play. So I think that could be a bright spot in this whole thing as well, too. Federal Reserve lowers rates, it's going to be good for fixed income. At this stage, no matter what phase of life you're in, I think you should have some fixed income in your portfolio.
Right, understood. Let's talk more about portfolio. Are your clients, what are they telling you? They concerned?
Well, I deal with people that are retired or close to retirement. And retirees need protection and they need income. So we focus on fixed income here at Providence
Taking
Financial.
these guys that took all my chips. I'm gonna give some back.
I believe that the future, the next decade, whether you have income or not, is going to depend on whether or not your portfolio is satisfactory to you or not. You know, in history, there are long periods of time, decades or decades and a half, where the market is just flat. A lot of crashes and recoveries, but wash each other out. And those are always followed by good decades. Well, this last decade, the market's done 15% plus. The previous decade, the market was flat for 13 years. And a lot of people think the next decade is going to be flat. And you can't count on your share price. You need to be invested for interest and dividends, because if we have a flat market, the interest and dividends might be the only reward that you're going to get. So we're really focused on income because it's the only thing that for the next decade you may be able to count on.
Yeah, understood. I mean, at this point, too, when you think about, you mentioned the 10-year bonds, you would like to see people have fixed income. Expand on that. What kind of fixed income would you recommend maybe people hold at this time?
Well, yeah, the 10-year Treasury right now hovering just under 5% is a competitor to the stock market. When it was at 2%, 3%, it wasn't a competitor, but it actually gives people a place to go.
No, you didn't.
And that's for the short run. The challenge is if you invest in a 5% 2-year Treasury and the Federal Reserve lowers rates within the next 2 years,
like some carcinogens
well, you could be shooting
on a
yourself
sandwich.
in the foot, because in 2 years you might not be able to get 5%. You might not be able to get 1 or 2% if we have a recession, this never coming recession that we've been talking about for a year and a half. So you can lock in longer rates through things like preferred stocks, through things like dividend paying common stocks, through things like annuities that will allow you to lock in 4 or 5% for a much longer term, business development companies, real estate investment trusts. There's a whole universe of options out there. And interesting, most of the options that are poised for growth, that people buy for growth, can be engineered for income. Stocks is a good example. You can buy growth stocks with no dividends, or you can buy income stocks or dividend producing stocks that are going to pay you income. And I think the focus for the next decade needs to shift from growth to income, from growth to value, which is where you're going to get most of your dividends. I think that's going to be the proper play, really, no matter what phase of life you're in. I don't think the next decade, it's certainly not going to be like the last decade. And there are economists out there that are thinking the next decade could be slightly negative. So you got to be prepared for that.
Right, understood. I mean, that's the big picture on all of this, Anthony. Thank you so much. Anthony Sicaro, Providence Financial. Good to see you. Thank you. Coming up next, we'll take a look at the names that are moving the market and look at reasons our next guest thinks now is the time to take a look at some companies and the stocks of Nike and Verizon, next here on Schwab Network.
I remember when I first started flying.
Here's a look at Bitcoin, up 2%, 34,630. All right, some more market movers and trends on our radar. Andrew Ahrens is with us, founder and partner of Synergy and Advisory Management Group. Thank you for being with us. Before I get to the picks, I'd just love to hear your macro thoughts here.
Well, I mean, big here, the market has sold off. The rough stretch that we had in September, October, and hopefully we're now going into November, which is a strong time in the market. November to May is markets up usually 75% of the time. And it looks like, the market was showing a bottom where we have a strong rally going on today. And, we're going to see some earnings from Apple this week. The Fed is going to speak about, where rates may go. And, if rates go lower, I look for the market to do its thing and move higher. So, I expected the market to take a hit in September and October, and I think that I'm still bullish on the market. And with the rates coming down in 2024 and it being an election year where the market's up over 80% of the time since 1928, I think we're in a good place right now in the market. I know a lot is going on right now, and investor sentiment is a little bit down here, but I'm very bullish, and I still think that the market's going to move quite a bit higher here.
Yeah, and there are some people who would agree with you that we might even see a rally going into the end of 2023. I mean, this is actually, as you talked about, seasonality, and we get through August, September, October now, things likely pick up. I mean, do you see something like that happening, and would you make moves ahead? Would you make moves right now that we've seen the selling that we have? Because basically on Friday, we closed in correction territory on the NASDAQ, the Russell, and the S&P 500. Would you make moves now and say, look, this sell-off provides an opportunity?
Absolutely. We're looking at it as an opportunity here. I think there's some great stocks out there that have come down quite a bit. Two on my list are Verizon, which my opinion is ridiculously cheap right here. I've been saying it for a while. Last week, it had the biggest day it had in 15 years. It rallied about 9%. It looks like things are turning around there. Their cash flow looks better. They have a very low valuation right now with a dividend yield of 7.7%. It looks like we could see, in my opinion, a 20% upside in the next 6 months.
Right. Oh, I mean, yeah, and you're right. I mean, it had the earnings.
Nuts, I haven't traded crypto in a while.
I mean,
but yeah,
when you look at month to date, it's up about 7%.
we follow it. There's some in Discord that are more into it than others.
Potential. I mean, this Verizon's at 34
I am bullish on crypto in long term, but
well,
I guess I need money first to buy it, and I want it to be cheaper.
In the 40s, and it could happen, possibly by the end of the year. So we'll see what happens.
Wow, that's a good forecast by year end, maybe. How about Nike? This is another one that you like, right? Why?
Right. Well, Nike doesn't look that cheap on paper, but when you look at how the stock trades and where we are right now in the seasonality pattern, Nike looks cheap to me going into Christmas right now. Their inventories are in much better shape. They beat earnings last quarter, and they're the #1 brand amongst teens as we go into the Christmas season here. They're working on direct sales to consumers to be more profitable. And, I think with the holiday season around the corner and Nike taking a hit so far this year, 50% off its all-time high, I wouldn't be surprised if we saw a big rally in Nike.
Yeah, it's funny because I saw an article from the Wall Street Journal that maybe they fell behind in innovation. They had an example of a guy who's been running for over 40 years, used Nike forever, and actually bought a pair of Hokas instead. Why? Do you feel like Nike is losing its edge somehow?
I don't really think so.
Closing a couple calls there.
Obviously, there's always competition out there, and some of the other brands are doing well as well.
Fuel to rally.
Nike is the leader.
Fuel to feed on.
And they're #1 amongst the teens, and they're the ones that are really buying the shoes. And I think they're going to do very, very well. as things pick up overseas and, as we get out of this whole coronavirus.
Yeah, and
Get
look,
out of
they
the
generate,
coronavirus?
$49 billion, and they're still number one when it comes to footwear and apparel. So there's no doubt that it has
Got a
been
nice little
clear
head and
leader.
shoulders of scaling out of these
Thoughts
calls.
here, because we are looking at a big week ahead. We're going to get the Apple earnings too, as well as the event. But the Apple numbers are very important. We have Fed, jobs.
We all get some puts.
Your thoughts on this week? I mean, what do you think we might be saying on Friday? And geopolitical concerns, of course.
Right. I'm hoping for it, but I'm also thinking that we're going to see a very positive week. I think the Fed will, not indicate that they're going to raise rates.
Hold on, give me 10 minutes to try and figure out how to open up a position here.
Cooling off, and I also think that
The wrong one there.
Apple may come in with some pretty good earnings. So we'll see here.
All right. Thank you so much, Andrew Aarons. Great to see you. Really appreciate it. Synergy Advisory Management Group. Thank you. Up next, taking a closer look at generative AI, the key trends and names investors may want to keep an eye on right after this.
Let's see, 230. Got VWAP. SPY might want to just close up here though, honestly. And higher. I don't know. But VWAP is down here. This does look like a little head and shoulders. I am prepped. Just fold through the kind. I got some. Not as big of a position sizing. Chat was popping for sure. Clubs got there. Jerk. Pocket sevens, what the heck? Dude had nothing. don't think I used anybody's link. I don't know. I didn't get free stocks at all. I don't know if I need to use a link or not. Maybe I didn't deposit enough. I think I only put like 500 bucks in there. I need to take that back out actually. Maybe I used a link. I can't remember. I think I tried to use Zip Traders, but I couldn't get it to work. Nice too. Beautiful. Why wouldn't I call that? Not like there were 2 2s out there. I didn't leave any runners for the homies. Horrible mistake. I know better than that. Thank you. Just one. That's all I needed. One. $17 gazillion SHIB. Nice. Yeah, I think I mostly traded on Webull, and I'd get so screwed, I think, on the fills. I don't know. Didn't work. SPY new high there. Broke out of that head and shoulders. Step away. I should have left runners. I know better. I totally forgot. Actually forgot. Not that I didn't want to. I just forgot. We got 30 minutes to power hour. I think could keep going. The head and shoulders failed. Still have a little bit higher for the top of this cup. But to me that's close enough to call it. Towards the end of the day, we just liquidity. Not sure if we'll even come down to VWAP. Been waiting for this bounce for a long time.
Correction territory late last week. What are we talking about now? Ben Lichtenstein's with
Lichtenstein.
us, and he's taking a closer look at where we stand with 90 minutes left in the trading day. Ben.
Should have left them for the homies.
Across the board here today, Nicole. All four of the major indices, as you just pointed to, gaining to begin this Monday and reversing some of the weakness we saw into the end of last week. So a nice move up over the last, session. For the Dow, as you take a look, it's actually the leader today, gaining significantly up over 1%. I have the Dow Jones Industrial Average queued up. We're looking at 1-minute candle charts here, and just the move that we saw from the lows Friday, 32,300. We're talking 600 points to the upside here off that low from Friday. So just shy of 33,000 and very well-defined trend up here. Nice start to the week. Again, packed full of eco data. We're talking jobs, primary focus there. Non-farm payrolls due out on Friday, but lots to focus on in between now and then. In addition to the Fed on Wednesday and
I should have seen this too. It didn't really break that.
So taking a look at the
Continue to just trend
away from that
a little
1-minute
lower.
candle chart, you can see where we are as we come off the lows.
But the head and shoulders is pretty obvious. Need to close at the break.
Futures, which was up around that
breaking that right shoulder
level, just shy. But I want to show you what the selling we've seen here in this most recent
RSI divergence now.
Puts us just a small blip on the radar in terms of some of the selling we've seen throughout the month.
Tapering going on up here if it doesn't at the top of this channel.
Below them as we speak. We're also below the 50, below the 200-day
Good
moving
for a
average.
pullback.
I want to point to the tech-heavy NASDAQ, which is the only one of the four that's been able to hold above this longer dated here. So keeping a close eye on that, but we're also watching the VIX, which has been on the move here, Nicole. And here you can see inching its way up above 20 beginning the week at that stubbornly elevated level here. It's come off a bit here this morning as the indices are rallying back here today about what you'd expect to see. But let's keep an eye on the VIX with the geopolitical tensions. A lot of unease headed into earnings. Again, comments from the Fed this week, as well as some non-farm payrolls data, some jobs numbers throughout the week. It's a lot for focus for investors and traders.
Yeah, it's interesting because as we're watching crude at 82.60, the questions were, why is it dropping, particularly with all that's gone on in Israel and Gaza? And some of the ideas were that maybe people thought it could have been even worse, or maybe it would have expanded more by now. Where do you think we stand? Because most of the guests I talk to still think the path of least resistance is to the upside.
Yeah, I think as we head into week 4, still kind of on edge, but price activity has been relatively contained considering the volatile environment that we're dealing with in the Middle East. And again, it does seem like containment there has been kind of the theme. So taking a look at some of the recent price activity we've seen off the highs, this was back in the end of September, if you remember, up around 95, back down to around 81. And you can see how we've been within that range since. Now, just kind of working our way towards the lower extreme, but we've tested this area a few times and it's found support. So I wanted to show you where we are relative to the bigger picture here, the move up that led into that run up to that $95 level, because crude prices had already been trending higher. Again, amidst some of that stronger than expected data that we've been seeing here in the U.S., we also saw dollar weakening a bit here recently into this summer, and also some of those production cuts help buoy prices. But again, higher rates and some of the other headwinds that we've seen have started to impact some of those and raise some of those demand concerns, impact that run up. Taking a look at where we are relative to the 50-day moving average, you can see just kind of teetering around that level. I mentioned still relatively contained. Here you can see that kind of hanging out in that range again, 95 down to 81. But yeah, cheering on lower crude prices in many ways here, Nicole, if it's tied to geopolitical tensions easing, but not necessarily if it's tied to slower demand from China, right, or a higher rate environment here in the U.S. and globally for that matter, dampening demand. So lots to sort of focus here, and I think the two-sided trade we're seeing, this kind of tug-of-war around the 50-day moving average, is a reflection thereof.
Right. Ben Lichtenstein, thank you for all of that. Appreciate it.
Fine.
Thank you, Ben. All right, let's turn our attention straight over to fast food now. Welcome in RJ Hottovy, Head of Analytical Research at Placer AI. Thank you for being here. A lot of good news surrounding McDonald's today. I also wanted to talk about Chipotle, also has been a winner over a long period of time and last week. So we've been hearing, are these two the standouts in the group? And what's the secret here?
Yeah, I think they really are the standouts. If we look across the board, we've started to see pressure on the limited service restaurant space, both fast casual and quick service restaurants. And largely, we started to see some trade down, particularly among that lower income consumer. McDonald's talked about pressure among the household income consumer under $45,000 a day, and we've seen that too. We've seen them start to diversify, go to more dollar stores, go to more value grocery. So we've seen some pressure.
Make another Head and Shoulders that actually works.
Two names like McDonald's and Chipotle that are outperforming and doing it in different ways. I think
I
McDonald's
add
has
to
really
this
done a good job with some of these more specialized promotions, the famous orders and things like that, as well as some of the things in the digital marketing front. They've done an excellent job on that front. That's really helping to drive visitation performance. Still slightly down year over year, but outperforming the rest of the group, which is running about a mid-single digit decline. Chipotle is a name that's doing a lot of interesting things in terms of innovation, and right now, because we're coming out of a period in the pandemic where there wasn't a lot of innovation, things like carne asada go very far. The other thing that they're doing right is that they started deliberately moving more towards suburban locations pretty early on during the pandemic, and I think that's really helping to play out. They've kind of met consumers where they've moved towards, and so it's a strategy we've seen like groups of Cava and Sweetgreen at the same time. And so I think that the idea that they've put locations in more suburban locales, I think is certainly helping them out. So not the same path, but two of the standouts in the category right now.
Yeah, you talked about McDonald's as rural dining destination, Chipotle as suburban destination. The different income brackets. We heard earlier from the CEO of McDonald's talking about that middle and higher income folks are actually coming to McDonald's. You noted in your notes here that Chipotle has been hitting the higher income bracket. Is this part of the recipe, is to try and get into more of the other areas? I mean, and why don't what do the other players do this? I mean, why can't they just do the same thing?
They can, and certainly that we've seen other players start to try to replicate the moves. But admittedly, I mean, it's two of the larger players in the category. McDonald's certainly the largest player in the quick service space, and Chipotle the largest in the fast casual. A lot of times they have the scale advantages to move into these locations. They're going to get the first offer and some of the leases for these
15
locations,
minutes per hour,
things like that. And they've got the scale to give up a little bit in terms of profitability if they need be. Certainly, we haven't seen much with Chipotle, but we have started to see McDonald's at least keep prices somewhat in check. We've seen a lot of inflationary pressure for QSR this past year, certainly among McDonald's competitors. And as a result, we've started to see, that because they've kept prices in check better than competitors, McDonald's is winning out on the value side too. Although I think it's more innovation driving it and some of the promotional stuff they've done. But certainly value is a component that they're winning out on. But you're absolutely right. We are starting to see, that lower income consumer trade out into other categories, and that middle to higher end consumer, they're actually trading down from kind of the higher end restaurants into the QSR and fast casual. We've seen a lot of evidence for that, and we've seen evidence of other channels as well. We're seeing that movement as well.
Yeah. I don't know if you do buy ratings and such, but I will say that Morgan Stanley, for example, the other day on Cava said they gave a good rating there, upgrading Cava to overweight from equal weight. They did cut the price target a few bucks to $41 from $45, but the idea was that the Mediterranean diet was it, and people love that. I mean, I would almost say that Chipotle and Cava are different, but they're similar. I mean, basically protein, a lot of vegetables.
Turning River, King Queen.
Yeah, it's interesting too, and Cava's been fascinating just because a Mediterranean concept has really never gained national prominence in the U.S. up until Cava. And what's interesting is because of that too. Typically, they don't have a breakfast day part. They haven't done as much of the evening day part. But this past year, we really started to see them on a visit per location basis. So the amount of people coming into their restaurants
there on the day.
next to the group, they started to outpace the fast casual category. And so what we're seeing with those numbers, or what those numbers suggest, is that we're seeing acceptance across a wider number of
Leave any for the homies.
And it really has taken off. So I think there's some
Hate me.
truth to that. I think that it's really kind of making a name for itself, and it's appealing to the masses here, and not just kind of the younger population. Done well with kind of the 30-something crowd as well here too. So it's pretty interesting to watch. We're seeing a lot of similar trends, and that they've really widened or narrowed the gap from the rest of the
ripping there
category,
still.
now actually exceeding in a lot of cases.
I saw something about Cheesecake Factory. When you look at
13
Instagram,
minutes to
TikTok,
power hour.
Oh, forget it. They were saying it's not a good place for first date, and then they had backlash. I mean, I would go. I'm perfectly married for many, many years, but I would go.
Doesn't look like it's tapering at this point. Hitting the top of the channel.
Cheesecake Factory, but is there
We can
any,
get them moved back to the bottom of the channel. I'll probably close the
goodies,
puts
right?
there.
About McDonald's and Chipotle. Are there any on the other side of the coin that
Like it's
you're
reversing
somewhat
anytime.
worried about because they can't seem to get it right for whatever reason?
Yeah, there are some names out there that we're still seeing some struggle. I mean, I would say on the casual side, Cheesecake Factory seems like it's holding up okay. But most of the casual dining category as a whole has seen pressure. We've seen the quick service space down kind of low single digits. The casual dining space is kind of mid single digit range. I would say those chains that are more urban focused on the casual dining side, I would be a little bit wary on that one, who have a higher exposure, particularly to cities like Chicago, San Francisco, where we've seen more migration patterns out. Those are the groups that I'd probably say a little bit further away from. On the flip side too, we've got a group like Darden that continues to do very well. Olive Garden leads with value right now. They've done a good job connecting with that middle income consumer, a little bit like what we're seeing with Chipotle. But I'd say if you had to be cautious somewhere, it's on the casual dining side, particularly the ones that are more urban exposed.
All right, RJ Hottovy, thank you at Placer.ai. Thank you very much. Good to see you. Coming up next, we're looking at onsemi down about 20% after its quarterly earnings report. Now what? Let's get some details. Our panel is ready.
See, 995 up 8.7. He's down 1.6, 12, 1. 1.35. Gap here, 417, and then 423 on Best Buy. Everybody has a straight. You guys don't have straights. I don't know if they all just call. You do have a straight? Do you think I had a higher straight? On a slow play or something? For a re-raise?
Generative AI space, and if you're not in there, you might get caught like on Semi.
Yeah, and you know, this bleak fourth quarter outlook, you know, AI
Well, let's see if there's
has been
still.
saving the day, Kim says, right, with respect to some of the semis, but not every company
bullish.
is based solely on AI, William.
Looking
And
for
I
a
know you had to
mean
lower your
reversion
price
trade at
target,
this point,
but
which
do you still see some upside for on semi?
That
What
sucks.
does it bring to the table in a good way?
in a good
We
way.
certainly do, Nicole. So I think you hit the nail on the head that the main story of this quarter is really guidance for the fourth quarter and even for the start of
Dang, I should
2024.
have
That
kept a
missed our
call.
expectations,
The
definitely
homies.
missed the market's
This is a nice move
expectations,
up
and
here
that's why
still.
you're seeing the stock down so much today. But OnSemi is
I
bringing
didn't
a
know
lot
where
of
to
value to
reload,
the
so I
table. So when we're talking about
reloaded at a
OnSemi,
bad
we're talking
spot
about power chips.
right
So these
here.
aren't the ones that are
And
going into the sexy AI applications right now, but
I
they
just
are
this
going into electric
literally
vehicles,
didn't
renewable energy applications, and we think there's a lot to get excited about
didn't want to
there
hold through that.
too. So when you put this in a long-term
Forgot about
context, we're
the
not
homies.
overly worried about a weaker short-term environment. As you said, it did cause us to cut our price target by a couple bucks to $94 a share from 97.
Why didn't I put a stop?
But after this 20%
I had to walk
soft
away. I
today,
should put
we
a stop
think
on
it's a
it.
good buying opportunity for investors. Again,
Gotta
because
remember
of
to do that.
long-term growth
For some reason,
opportunity
at
in
some point during
electric
the day, I just
vehicles,
like decided to
renewable
stop putting
energy,
stops.
and
I
emerging
don't need any more.
technologies like silicon carbide.
I've had enough of them.
So that was it. I mean, renewables, the electric vehicles, and more, and that will help this company with margin expansion. So Kim, what do you think? I mean, do you think this is a buy when this name? I mean, William was just talking about this thing going to over $90. It's sitting at $66 today. Kim, is this a name that you like, or do you much prefer other names in the group?
I do prefer other names, and there are some warning signs, I guess, about EV adoption. I don't think it's because of the auto strikes, but it seems as if a lot of the U.S. manufacturers who had been pouring in money into creating EV models and EV, assembly plants, they've been pulling back because the buyer just isn't there right now for EV. Now, it depends on your timeline. I'm the timeline girl. I'm 3 to 5 years all the time. But at this point, I think my expertise and my background points me to more of the compute kind of semiconductor. So we like those better than, the where on is playing, although I wouldn't count it out. But I think it's going to be in the penalty box for longer than we anticipate right now.
Yeah, understood. William, you've talked about OnSemi for some time. You talked about the EVs and energy and such. Are there other names that you like as well in this group? I don't want to leave them out.
There are actually. So the one that comes to mind is another one I've talked about before called Monolithic Power Systems. Now this is going to be a play similar to OnSemi, where these are power chips, so not necessarily the compute chips that are all the rage for AI right now. But Monolithic Power actually has good placement for power chips in data centers. So they're still selling alongside the likes of NVIDIA GPUs. We think it's a terrific company fundamentally, and we've seen the valuation just come back down over the past couple of months. So that's another one alongside OnSemi, where we also see attractive value that we're talking to investors about right now.
And look, this was nearly a $600 stock. MPWR, Monolithic Power, was nearly $600 not that long ago. It's down at 406 now. So I see what you're saying when you say you like it, without saying it's sold off, but more so that you see the opportunity. Where do you think this stock could be headed, William?
Well, so for Monolithic Power, our fair value estimate on it is $535 a share. So, similar to what you said, it's a stock where we've seen that price go above our fair value estimate before, and we haven't liked it. But it's something we've always liked fundamentally from a company standpoint. We have a wide economic moat rating on it, and now the price just looks good. So that's why we're talking about it.
Yeah, that's what I said. Okay, MPWR, once again, it's at 407 today. Thank you both. Kim Forrest and William Kerwin, it is great to see you both. Really appreciate this conversation. Thank you, friends, for being with me here on the watch list. I'm Nicole Petalides. Keep it right here. Oliver Rennick, Market on Close, next here on Schwab Network.
I was born on the south side of Chicago. It's been a long road, but now I'm working.
Oh, hi there.
I'm working for Schwab.
You can grab a little right shoulder over here. Break this channel though. Gonna close some of this channel, but quite get there yet. Fortunate repair there. How would I think the barbecue plant administrator would not want us to return the shares to BB? I don't know. All the straights. A 4, a 10. Alright. Come on, go all in. Oh. 10. Wait, what? 79, I need a check. Whoops. That was 2 cards shy, that was 1. I can't answer that for you, Melly. I don't know what's going on with it. Me to gamble? Okay, I'm game. Alright, look at that. Power hour push. Holy smokes. Oh my gosh. Alright, we're squeezing here. I don't have any other explanation for that. That's a gnarly CNS close. Well, we haven't seen that in a long time. Did I win? Bear. Wow. Look at that wick. Holy, wicking down now. I've not seen that in a while. How am I supposed to close? Didn't call? Oops. Try my best. Data that came out right there? Treasury releases borrowing estimates. Oh, wow. I didn't even see that data was coming out. Treasury releases. Wait, is that today? Yeah, that was right at 3. Oh, wow. I thought that was just CNS close. That's actual news. I mean, it could find comfort up here. We're at 5-day on the daily. Got right to that. It's a bit of safety. That's weird, I didn't see that. Earlier it didn't say there was any data today. On when I look at, I mean, I would not have expected a move from that anyways. It's gotta be, expectations were way off on that. Crazy. Yeah, because I look at what, Market Watch, the US economic calendar. Then if I want more detail, I look at our Discord, do the econ calendar. Reaction. We had a perfect dip buy on the bottom of that channel. If you wanted it. Thing settle down. Need a break here. I couldn't get it close fast enough on that. I do like your patience though, Bubba. You waited all day for that put. Pretty good. That looks like it wants to close up here today. This to break, and maybe BWAP. or maybe just support on the top of this resistance back here for that cup. Oh, beautiful. Backyard lines. At this point. $10 on AMC, called it, guts. %, on overstock. He's been selling off like crazy though. Below that support. Not looking good. Yep, hit 10:01. Yahtzee. I really doesn't care about VWAP today. I mean, it did all day till now. Those bulls, but liquidity most of the day on it. Too strong. This rally's probably going to continue the rest of this week. Maybe not the rest of the week, but into, I'd say probably into Wednesday. Then we'll see what FOMC and all that. Oh, 12 million. Oh, I got a new bracelet. Agony. 501 million I can win. What?
Into that dip. Everyone thinks they got to replace their PCs, and everything's going to swing back up. The big cycle.
Exactly. But then you've got a lot of like competitive elements going on. I mean, look at Western Digital, for example. The trading in the stock over the last week is nuts.
Yeah.
Because they had the Kioxia deal, not going to happen. Then they're going to split it up instead. And then we also have the Apple in-house competitive move.
Yeah.
And there's just a little bit too much kind of intra-sector warfare, I feel like, to necessarily have this sunny narrative on the macro side right now.
Well, they lost, when we talk about Western Digital, they lost less than expected. And they're talking about spinning off the flash memory business. Well, that right there can create value in a company, right? When you break something up into pieces. So they have two parts of this company: traditional hard drives for computers and flash memory. And it sounds like their plans are to spin off the flash memory part. So the fact that the loss narrowed for this quarter and the projected loss for next quarter is narrower than expected. Has Western Digital up right now about 7.6%. So a nice day there. And you're right. You look at the chart, last 5-7 days, all over the board.
Yeah, but ultimately, I guess market found some peace with it because we're basically back to where we were before the deal was cut.
Yeah, big round tripper.
Yeah. All right. There's a lot going here within the sector. We're going to have to keep a very close eye on everything to do with chips this coming week, with Apple being the focus. And a lot of these stock-specific stories kind of at odds in the market. But look, upside is winning out today. NASDAQ up 1%. Nice little bounce back.
Very surprising price action today. Now, we've seen jittery markets on Friday turn into relief markets on Monday morning. Not 1.25% though on the S&P. It's a big move. Yeah. There's something tweaked slightly, it feels like. This isn't turning into as horrid an event as we thought. It's more going by the book in terms of war and an invasion and what they thought that the response would be. Now, it's not great if you're there. It's horrible, but at least the market isn't seeing any massive risk, or this market would not be doing this today.
Yeah, crude oil down 3%.
Yeah, that is a. I think if
that's risk on almost within itself when crude's moving that much down.
Unless you're worried about demand, right? Unless you're worried about
I consolidate up here. It's 45 minutes to close. Today kind of feels like it flew by.
Slightly higher is not supply. It's got to be a demand issue.
Okay. All right. Thanks,
yes,
Kevin.
sir.
Appreciate the thoughts. All right. Taking us through some of the tech stuff. Let's continue that conversation with Sarat Sethi, managing partner and portfolio manager at Douglas C. Lane Associates. Sarat, good to have you here this afternoon. We've got a big week ahead of us. Fed, Treasury plans on how many bonds they're going to have to sell. Apple's report. What to you moves the needle the most here?
I think interest rates. The whole story seems
consolidated for like an hour now.
As soon as you get close to that 5% level, the market seems to level off and sell off. And you were just talking about the Monday move today, but we've had that happen the last couple of weeks as we get later into the week, and nobody wants to be long on the weekend, just given what's going on geopolitically. So it's interesting to get these jumps on the early part of the week, but I think the interest rates are going to be really important to see what the demand for the Treasury is going to be. And I think, Apple's going to be really big. And for a couple of reasons. One is, what is the true demand? And obviously, we're going to talk about, what products they're seeing selling. But I think the demand and the consumer is going to be a tell from Apple.
Apple, of course, was heroic in its rise to new highs this past year. Does the valuation demand them to show perfection, or has the pullback we've gotten from the highs, does it open the door maybe for this company to return, act as the pillar, and put this market up on its shoulders?
Crazy.
I think expectations are going to be pretty high because they've had a hard issue of increasing sales. So where do you get the most bang for your buck for Apple? It's going to be margins. And I think that's going to be interesting. People are going to be focused on how are they expanding margins now. If they take more products internally, which we know they're doing, that could be a true benefit. And the other part is what's happening in China, what's happening for their demand products. Are they actually getting substitution effect, or are people taking longer? And then the other part we would talk about is what's going on with streaming. I mean, you've seen all the companies in streaming get hurt because they're spending more money but not making money. And will Apple actually talk about that, or will that just be more about the Apple Store to show margins improving?
Okay. So let's say that we get something even on that report. Let's say Apple doesn't move the needle. To the convo about bonds and
teller
yield right now that's sitting roughly at that 5%. Got a Fed decision. Everybody basically expects them to kind of do nothing. Then we got to unveil from the Treasury on how they're going to fund all of the deficit sales that need to happen.
Oh, even better.
Here, how do we gauge the potential of those two events versus each other, Sarat?
You had the low pair and a kicker.
So, because if you don't have buyers out there, that could cause some havoc
that you got
in the
trips.
market because you will get rates moving, and then at that point you get equities also trying to figure out where we're going with that. I think you're not going to see the Fed do anything. 11 rates has been quite a bit. We're seeing demand slow down on the consumer side. We're seeing corporates talk about less spending. You were talking about Meta. Meta's talking about advertising potentially slowing. So you are seeing parts of the economy slowing. So I don't think we'll get that. But I do think if we get any type of positive news out of rates, that's going to help funding deficits, and it's also going to help on the equity valuations.
How do we know if we're at that in-game style, chaotic deficit event that seems like the gold bugs and the Bitcoiners are really telling us could be soon? I mean, does it feel imminent, or even just kind of theoretically if it's not? How do we know if the market's fed up with it?
I think you'll see a big move in the bond market, which I think that will then give a signal to Congress and to the government to say, hey, we can't really do this funding. But until you get something like that, I think it's just, as it is. People will still keep on going and funding our federal deficit until the markets really signal, as the quote, the bond vigilantes come back.
What about the dollar? What role does that play right now, Sarat? Because, I mean, we're staying higher for longer. Some of the other banks are still cutting. I mean, Europe had a brief moment where they stepped out of the COVID muck, and it feels like they're back kind of stuck, not due to the virus, but just their economy never really got the jump start. They've got inflation, but they can't hike anymore because they're on the verge of recession. So, I mean, who's to say we can't keep printing? I mean, who else has got a better game?
You're absolutely right. And one of the reasons that we like commodities in this area right now is because you have a strong dollar.
Is it
and
19?
so you look at some of the commodities, they haven't done well. The
All right,
stocks haven't
thank
really
you.
done well, whether it's copper, aluminum, steel.
The
But I
19
think
of
the
you.
dollar is going to stay
Appreciate your thumbs
longer.
up.
It's going to stay higher for longer, just as we've got rates higher. And Europe is stuck. I mean, look at Germany. They're not growing at all. The rest of Europe is not really growing at all. And energy prices for them, let's see what happens in the winter. I think people are scared. Because if they do get a bad winter, which they didn't have last year, that's really going to affect their exports. So, we are the best house in a bad neighborhood. Dollar's going to be stronger. That helps a lot of our U.S. companies, especially, on the commodity side.
Does gold play a role in the strategy right now? When you talk commodities, just kind of curious how that fits in. It's had a nice couple of weeks here.
It does for us, and we were
Have
playing
some
through a couple
tapering
of
up
different
here.
stocks there. They haven't
Not
really,
much time,
the
though.
stocks
I don't know if
haven't
it'll
really
play out.
reflected the price, but we do think it's going to be a good hedge because we also don't think inflation is going to come down as fast as people expect. So economy leading down, inflation slowly kind of there, but not really coming down as fast. And I think that has to do with a lot of what we're seeing in terms of wages, in terms of prices going up for almost anything that you buy these days.
And when you say stocks, talking like gold miners or commodity-driven stocks as a proxy?
Yeah, like a Tech Resources or Wheaton, those type of companies that are gold focused.
Got it. Okay. And then lastly here, when you combine these together, where do bonds sit on that? So it seems like the commodity side, you want to have a presence there. If the risk is the upside for yields, do bonds shrink in their role in the portfolio?
I think you got to be short on the bonds. You don't want to go out too far for two reasons. I mean, when I say short, meaning maybe duration of 2 to 3 years, because if rates do go up higher, you're protected. But also more duration
in the last
risk.
minute.
You just want to make sure that the credit quality you're holding, because if
Kind
the
of
economy
news.
does slow and you see spreads
Oh,
widening,
look at
you
that
want to
fold.
make sure that you're able to hold the right bonds and
Not
not really
seeing anything yet.
destruction on your capital.
Got it. All right. Hey, Sarat, love the analysis. Very helpful for us and nice pathway of logic to follow.
Thank you. Great to have you. Great to be on.
Yeah, absolutely. Sarat Sethi, Douglas C. Lane and Associates. All right, a good macro conversation. Let's dive into some of the Apple details when we come back, and also the event too. Scary Fast, a little Halloween themed unveil over there.
See if SPY respects it. Raise battle with this guy. Pair 10s. Okay. There's a flush. Two pair. Back to that tapering channel. See if we can break out for him today to the downside. Got a shoulder here, got a head up here. Could grab some liquidity on this right shoulder. We're over here. Suppose I could add if we did something so cheeky like that. Macy's Thanksgiving bull run. Interesting. Does Macy rally for Thanksgiving? 3.5% on Macy's. Yeah, looks good. Got earnings to contend with though. That's coming up. Chart looks nice though. Okay. Okay. Raise and a re-raise. All ins, cool. Pocket aces, jack, ace. Dang, nice. Well done. Well done. Got me to go all in. So happy for you. Let's buy 330. This guy's just taking all the chips out of my bank. Through high of the day there on SPY. Top of this channel. Oh boy. Oh boy. What? My homies are pissed at me right now. Yeah, you had nothing. Completely bluffing. But if I called, I would have lost. Yeah, SPY. Dang, dude. One of those days. Like the bearish days we've had, but bullish. VWAP is not necessary. Necesito. We'll get a pullback into close, but might be from up here. And that pullback might just be to this liquidity that the bulls built. Mucho sucko. Yeah, it's not even like I'm trying to call a reversal. Guess that's technically what it is. Oh, not even.
Or 7 years
Well,
ago.
I'm happy SPY's rallying though.
This has always been the one thing that's plagued Apple, and in the past they used to trade
Macro.
at a multiple that a hardware company.
Let's see.
And you know the market today has kind of said, we believe
retest of some levels.
that Apple's going to steadily transition out
I'd love
of
to
this
get like a
hardware
big
business
rally
and
up to
become
here
a
to get some more
recurring,
puts.
services business long term. Those transitions are never smooth. And I think we're at a
I'll naked without my puts for the last
turning
like
point in that
2
transition
weeks.
for Apple. There's going to be a lot of great opportunities to own Apple on the other side of this. But betting on iPhone sales for the next 5 years, we think is a dangerous thing to do. And you've been seeing all the reports about these Magnificent Seven and how expensive they are on a multiple basis. And man, we like owning everything else in the S&P 500 right now, except for Apple, Tesla, Nvidia, Amazon, and these companies that have held on to these multiples because of this public reputation, not because of their actual earnings power.
And what do you think might be a more reasonable expectation then for top line? Because there's still an expectation for some growth on an annual basis. You think it'll be low single digits? You think it might actually flip to a negative again like we got coming out of the COVID recovery?
Yeah, this one's... I'm going to be interested to see how people react to this one, because there's a high, so expectations are for iPhone sales to be down about 2% this quarter. We think they could easily be down 5 or 6. And then the next piece is in the fourth calendar quarter here, which is Apple's first fiscal quarter for next year. The market is saying we think they're going to be up 5%. And the only reason the market's saying that is because fourth calendar quarter of last year wasn't a great one for Apple. They were down about 8% in iPhones. And that's the number that I think people are going to be really sensitive to. And I would frankly not be surprised to see Apple decline again on their fourth calendar 22 number. This is what we saw in previous hardware cycles for Apple. When they're fighting interest rates, when they're fighting declining feature improvements in every incremental phone that they're putting out, people have been talking about a higher form factor for this iPhone right now. There's just not a ton of excitement or rabbits that Apple is pulling out of the hat right now
this
to
guy?
keep that number at least flat. So
enough chips
even
to
though
bluff.
the market's saying we think they're going to grow 4 or 5% on iPhones in the next quarter, we think there's a chance that number is negative. And you better believe the stock's going to move if the management team is communicating something like that.
All right, understood. Like the rundown here, and definitely a sobering reminder of some of the threats that might face this company coming over the next 6 months. Thanks, Robert. Appreciate the contribution.
Got it.
Robert Cantwell, Upholdings Investment Management. Coming back, we've got 3 trades in the options corner. We're going to take a look at today's big decliner once again on semi. Someone buying the dip, though. We'll take a look at the style of trade that Tom saw there. And then, speaking of payments, Toast.
That's why consolidating up here some more. 30 minutes to close. Called. Queen. Oh. Jack 5. King, king, king. He did not catch a break. No king, no ace. Another jack. Got some egg calls. Wow, that chart looks awful. Pretty. getting nice hands. Nothing's coming out for me. Other people are getting lucky. Another green channel. Okay. Not enough. Hey, look, I flopped something. This fades. Oh. Oh my goodness, I want a hand. Still down, I think.
Seen over the last 5 trading sessions, and calls are still out trading puts today, Oliver. So there might be a few others in this name trying to buy the dip in here. But yeah, Wipeout at 20%. Stock's now only up about 7% on the year, hitting 10-month lows.
That's amazing.
In the shares.
It was up 50% at one point.
Yes. Yes, the stock got, I believe, above $111 a share earlier, about 3 months ago. So yeah, this is a big slide, but somebody stick out there in the option market buying some higher delta or in the money calls here for a bullish stance over the next 81 days.
So long-ish term as far as like options go in this block, we see a lot of like weekly stuff and monthly. So 3 months with the almost $7 buffer zone between the strike that they buy. You know, it's not a synthetic long. It's not. But, I mean, it's an options trade, but it's not like...
It's almost like a stock replacement at this point.
They're not looking for a snapback.
Yeah, and they gave themselves some duration on it. That's why they're paying the hefty $10.50 premium for each one of these options on semi. I mean, you know, if you've got the capital, you're buying like maybe a 65-70 delta call that reacts more like the stock on any up moves. Not a bad way to do it, but it usually takes a lot more capital to buy those deep in the money calls.
Got it. Okay.
A good flop.
For Albemarle, let's go there because it is down a good bit today as well. The PBW ETF of green energy plays is down about 0.75%. So there's definitely some underperformance in this whole category today, given that the market's still up. And a lot of the stuff connected to electric vehicles in the case here of Albemarle, lithium maker, miner.
I think this is all going to be a demand story, and I think a lot of the euphoria around EVs is starting to change. I mentioned that Ford pulling back from their $12 billion investment in the EV space. A lot of the automakers are losing money, so they're going to start producing more ICE vehicles, right, internal combustion engine vehicles, because the input cost is so high right now for the EV space, and the competition is getting tougher. You see, Tesla taking advantage of their margins, cutting back on the prices across the board. But Albemarle, this stock was $250 3.5 months ago. It was $180 a month ago.
Sheesh.
And now it's trading below 130. So yeah, this thing's been sliding down 41% on the year, 25% so far this month alone. At 3-year lows today. So pain trade right here for Albemarle. They do have earnings on the 1st. So later this week they've got earnings. That might be a catalyst to the upside because this stock's been so beaten up. But I think a trader trying to take advantage of that. They were out in the December 180 strike calls. 180. These were over $50 out of the money to the upside. They bought 5,000 of those for a debit of only 60 cents, right?
Much more aggressive than the on trade.
Right. But I brought up those price levels to reflect that, hey, Albemarle was 180 a month ago, 250 3 months ago. So it does have that ability to, have big outsized move. But they bought 5,000 of the 180 strike calls in the December monthly cycle. Average debit of 60 cents, so that break even of 180.60 over the next 46 days. That's 41% above the current share price in there. Call volume about 3 times normal daily average volume that we've seen over the last week of trading. So yeah, somebody's sticking their neck out and saying it's not a pure earnings play because they did the December options, but that catalyst to the upside, maybe to right the ship here, might be that earnings event on the first.
Okay. One that suddenly becomes maybe a must-watch, given the fall-off in these shares and an incredible reversal from last year to $330. All of that EV stuff basically peaked right when the government outlaid a bunch of money towards it in the Inflation Act. Yikes. Okay, last one. Toast. You do have a winner. The stock hasn't really done anything
consolidating
too exciting
right
for
here on the
like almost a
5-moving
year
average.
now. It just goes back and forth between like 16 and $24, which I
If
guess
that's
is
the
a decent
safety
range.
of,
It had some big
I don't
moves
know,
in there
VWAP will
when
be
June
maybe
when
just
they
a
announced that 99-cent fee
move
that they were
down
going to
here to
charge
the
the customers,
breakout level.
right? Not the
Maybe
restaurants
retest out
that
of
were
support.
using the Toast software. But then they got
Looking
pushed
pretty
back on
bullish
that,
into
took
close,
it away
though.
in July. So we've had some choppy trade in there. Stock's still down about 12% so far this year, even though it's been that choppy trade that I talked about. They've got earnings on the 7th of November. So that'll be a key event here, maybe for the stock. But the unusual option activity I saw out there was to the downside. Somebody buying puts. They're buying the November 10th weekly, so it'll expire in 11 days. You'll capture that earnings event on the 7th. They bought 15,000 of the 15 strike puts. Average debit of 75 cents, so that break even of 14.25 over the next 11 days. That's about 10% below the current share price. Option market at this point, with about a week to go until earnings, pricing in about a 10% move. Put volume 15 times normal daily average volume, but I think somebody's setting up for some pain going into this
I
earnings.
sense some
result
pain
and
behind
buying
those
some puts
eyes.
ahead of it.
All right, so the one that's
You know what the
actually
best
up on
cure
the
for
day, we've
pain
got the
is?
bear trade in.
Yeah.
Weed.
So there's a lot of dip buying, a lot of fading of moves going on, and a little lack of hope, I guess.
That's my
for
second
Toast
weed
going
joke today. It's
into
like I just
the
got
fourth
high all
week.
weekend.
They're going to report at pretty much the low ends of the range. I mean, it hasn't spent a whole lot of time under $16, really.
Yeah, but they've shown pretty good growth on their last couple of quarters, taking market share away from competitors in the space.
Yeah, like Block.
Ooh.
Yeah. But Block's also at lows too, so
yeah.
I don't know, man. Market just doesn't
Did I
want.
call
I mean,
anything?
that's what our last guest was talking about, though, which is the kind of carnage in some of the payments outside of the actual just swiping Visa Mastercard plays. A lot else has gotten hit. Thanks, Tom, for the trades.
Holy crap.
Coming up, let's talk some
He's
commodities.
king.
Crude oil. The
He's high
letdown
flush.
for bulls
Congratulations.
continues.
Was that all
No
in
matter
for him?
what happens, WTI seems to be stuck, and now at the lower end
He
of the range. of
did it
its
so
support.
fast.
We'll take a look at it next.
So fast at taking my chips. I forgot how many chips I had. I need to chill out. Give them all back. My flush. Hey, beautiful. A little head and shoulders up here, but still stayed in this bullish channel. Alright, testing it. 20 minutes to go. Yes. 15 minutes. That's fine.
Lower. We've had very volatile trade. Every day we had a $3 or $4 range. If you look at a minute chart, we've had a lot of $1 moves up and down. So a lot of people have been playing, if you have a one lot on, it moves $1, it's $1,000. So a lot of people have been playing $1,000 blackjack. That's if you have a one lot on. A lot of people put more than that on. So extreme volatility as people try and figure out, minute to minute, what is going to happen there in the Gulf. But again, today we went back down and almost tested that low on the 6th. And that's interesting because I learned this a long time ago when I was just in my 20s. Guy told me if the market doesn't do what everybody thinks it's going to do, it's telling you something. So if it gets really bullish information and doesn't hold a bid, or vice versa, if it gets really bearish information and does not hold an offer,
I love that.
The market is telling you, I don't care what your opinion is, what's your P&L tell you. And so right now we're at a critical level, $82. I think that it has to, if you're a bull, if you're dead set, we're going to have $150 oil.
Might be having to hold these till
this is
after
the
hours.
at 82, and that's the nice thing about the charts. It's like your homework page, right? It's the real truth. It's the truth in the matter. Price is what matters. So
Not sure if
everybody
we have any earnings after hours.
You have an opinion,
Significance.
cart it up, timestamp it. If 82 holds, you're a bull, you may be okay. If not, we may see this stuff drift lower. And I think that would surprise everybody who, logically you think, oh my goodness, that part of the world is, having, major problems. You'd want to be long crude oil. So just goes to show you sometimes the markets are more far reaching. I know it's stupid and it's cliche, but it is a futures market. It's not a right now market.
Sure. I think it's a really good point too about
Overstock's a spot 13.
Right? Where hey, I love a good narrative as much as anybody, but price action ultimately determines it. And when it seems like the narrative should really be pushing it in one direction and it doesn't, despite that effort from the consensus narrative, then there must be something very real happening here in price. And so, despite all that kind of bullish geopolitical driven narrative, crude at 82. If we break through 82. I think also your point there about the level makes sense because there was so much trading in that lower regime, the kind of lower half of crude the past, 9 months basically, that
yes.
This was kind of the dividing line. I mean, it kind of feels like if we go back below 82 into 80, I mean, anything's possible. There were weeks where we went from 82 to 72. We had 10 weeks like that basically.
Yeah, what if you go back to 65? Remember, we were at the bottom of that range. That's probably the low, 65.50. I remember distinctly because the storyline had been that the SPR was going to get refilled at 70. In fact, we called it the Biden put. 70 came and went. Nothing got bought. So who's ever in charge of that program, I wonder if we get back down to 70 again, if they're going to wait again and try and squeeze it again, because they have been given a gift that went all the way to 95. Which is where we are short as a nation. Whoever sold 180 million barrels at an average of $95. So just think about that. Every day moves. How much money is that position is gaining or losing? So I'd watch that carefully. And yeah, this is going to be something that 5 years from now, anybody that's in grad school or learning how to trade, we're going to be talking about why didn't crude do this when everybody thought it would do this. And again, that's why these markets are so volatile, and it's an option where it's a market where options can really be your friend. Because like I said, if you've got a one lot on future, not only are you putting up about 10 grand with a margin, but every time it moves $1, you're making or losing $1,000.
Yeah, okay, that's true. Like you said, $1,000 blackjack.
Yep.
Because it does kind of feel like, if you play it perfectly here, you basically got 50-50. It either holds 82 and bounces or breaks down. So that's about as good as you can ask for in blackjack.
All right.
Thanks, Chris. Like the perspective and look at the chart.
Coming down to the Fugazi.
Institutional services. It really is an interesting situation for WTI here. Not living up to the bullish expectations from that narrative. Coming back, we're going to get our Charles Schwab big picture discussion to get you prepared for the week. And one last macro discussion before we go to the bell, at which point we have some earnings this afternoon. A couple pretty interesting names and an overlooked stock as well. That'll be some fun. This afternoon, Aristonet is reporting, Pinterest as well, and another tech company that's overlooked that had a great couple of years but has been falling off hard into its earnings. We'll be right back to talk some macro, take us into the bell.
Barbecue? Why? My question mark? No dead? It might not be. I'm curious what happens with these pairs that people have. All right, 10 minutes for Ghazi coming in. Get a little slow play going on in here. If I can get a re-raise. It's gonna be a call. Or fold? Wow, those guys. Could have played it a little slower, I guess. I don't know. I want to keep playing slow. They didn't have anything though. All right, there's 10 minutes for Ghazi. Lots of failed head and shoulders here at the top. I don't think we're getting VWAP. That'd be a big move for the last 10 minutes. Maybe 415 though. Or maybe after hours get VWAP if we have earnings. Everyone's so excited the world didn't end over the weekend. They just buy and hold the SPY on Monday.
So, you know, we have the bullish seasonality. That's what we have going for us. We have a lot of potentially market-moving catalysts that would be coming up. Maybe the Fed will be on our side. Probabilities have been moving in our favor. So, Apple, I don't know. That one's a big question mark in terms of they're going to provide a lot of optimism, you know, for the bulls here. But in the meantime, you know, I think this is just kind of doing one of these bounce type of a trades after a really harsh 2 weeks.
Okay, yeah, sounds very reasonable at this juncture. I guess VIX at 19.6, we're not coming off too much, still hanging out near the highs, so stay on our toes. Colin, as far as the events on the macro side go this week, I guess let's talk
Be patient, not question
FOMC
fate.
first. We're not expecting
Cousin
the
Carl's
hike,
friend Ryan.
but what else could there be? I mean, it seems like folks have largely written this
Best
event
Monday
off.
of the year? What?
Yeah, we're not expecting much, Oliver. I think it's going to be
Best
a pretty
Monday of the
uneventful
year?
meeting.
Up a
We were talking about
one-
this just the
one
other
and a
day.
quarter
There's basically
percent?
a 0% chance of any change, whether up
That's
or down.
wild.
Not anyone is expecting a cut at this point.
The year's almost
but
over.
0% chance of any change. We don't get updated
Been that
projections.
bad of a year?
We don't get an updated dot plot. So it really comes down to statement changes.
I
So
don't know
maybe there'll
about
be
that.
some acknowledgement in the statement that the economy continues to kind of surprise to the upside.
I don't think so.
But we don't
I don't
expect
think
too
so.
much there. It's really going to come down to the press conference and comments from Fed Chair Powell about what he sees going forward.
I mean, I guess saying Monday does limit it, but still.
Years and how I'd say
Correct.
transparent they've been.
Incorrect.
We get
Guts.
so many speeches and interviews from various officials that we have a pretty good pulse on what they're all thinking about. And Powell's made it pretty clear
That's crazy.
where he sees
If that's
the
actually
current
true.
state of monetary policy and what might need to happen going forward, where the door is probably open for another rate hike. Projections suggest it is based on the most recent meeting.
We don't have any big earnings after hours, do we?
And Powell's kind of in the
Didn't
middle.
get my
where he's left
most
the door
anticipated
open and
earnings.
has highlighted that bringing inflation down to that 2% target is the #1 goal out there. If it doesn't convincingly move down, or if we actually see inflation reaccelerate anytime soon, which isn't our base case right now, but if we were to see that, the door's open for another rate hike. I think
tried
that's
to
going
call.
to be the point that Powell's making, that they're not done yet, but I'm sure he'll highlight that they're probably close.
Did my best.
Just looking at some of your commentary in your recent writing.
October 30th, HSBC, McDonald's, ANET, On, SoFi,
Imagine there's been maybe
CH,
some
KP.
fragmentation of the credit strength.
I
But if
don't
you
think
the
that's
Fed
gonna
is
do
done,
anything.
Does that present an opportunity then?
Tuesday we have AMD, Amgen, Caesar, Pfizer,
On average, if you look at the whole
Caterpillar,
index of
BP,
investment-grade
Bud.
corporates, you're getting a yield of around 6.4%.
A lot of earnings, but
or so.
big
That's just
spy
attractive
movers,
from
I
a,
don't
kind
think
of
so.
time series, long-term standpoint. These are levels
Thursday we have
haven't
Apple,
seen
which
since
definitely can
before
move
the financial
full SPY
crisis.
after hours.
Another reason why we like them
A
is
lot.
the slope of the investment grade curve is positive, meaning investors are earning more and more as they go to intermediate and longer term bonds. I think that's important because there's sort of this
You got, bud.
investor psychology when you look at the treasury curve
Bold,
and
huh?
the inverted nature that we see, that it's a tough pill to swallow to accept a lower yield with a longer term bond than something I can get in, say, a money market fund or a short term treasury bill. That's not necessarily the case.
Fun
with
fact,
investment
trust
grade
me,
corporates.
bro.
You actually are rewarded with
Okay,
higher
yeah.
yields as you move out the curve.
Like, there's a lot of big green days
Concerns
this
in
year.
terms of the economy
One of
slowing
them
and what that means
sure
for
there's a Monday.
corporations. But these are blue chip investment grade rated companies. There might be some cracks here and there, but they have investment grade credit ratings for a reason. And we think their strong balance sheets and more stable cash flows would allow them to withstand some pockets of volatility or an economic slowdown.
I wonder if there's sort of an equity analog here, Nate, if we were to rank the major 3 indexes.
4 minutes, 5-minute
as,
finger
S&P
slap. Pretty
and
subdued.
Russell, and like their own capital structure. Are the small
Fugazi's
caps,
been
like, at the
mellow.
bottom, the
It's
riskiest?
just
It seems like that's
consolidating
the way
right
the
around
market's
that 5
been
moving
lately,
average.
where maybe the big tech is the more
I
common
don't care about
grade,
VWAP.
but when you move down, it's just like the Russell has been getting battered
Bullish.
without relent.
I did close another one of my January puts on SPY.
Two-edged you're exactly right.
So
They've taken it out
still
of
have one
Russell
for the
big time
homies
because those higher
on the
rates
longer
are
term
gonna have
swing
more of an impact,
swing trades.
on the business models of those smaller companies.
That's
But
why
then
the
you
scale
look at
out's
their
nice.
valuation,
I sold
and
most of
they're
them
running
around this
12 PE or
bottom.
whatever, so you could argue that, well, maybe it's priced in at this point.
Didn't
And if
catch that
yields can
re-entry,
begin
which
to
would have been
kind of
nice, but
come in a little bit, then
yeah, I
maybe
just
that
sold one
leads
more
to
there.
perhaps some money flow to
So
a sector like
we'll be
that.
checking the
But
channel.
of course,
Bollinger
technology in this
Bands,
digital age and
moving averages
basically
for
the market
another
cap
entry on
structure that
some
we have
SPY
with
puts.
those top 10 holdings there, that's
Might get
gonna
them for
be very
February instead of
important. And Oliver,
January.
I'm sure you talked to a lot of
Next
guests
time.
that basically question whether the market
We do
can
get a good
continue to
Santa
rally
rally.
if we
I
don't have
could
participation
take some
from
time to
mega
sell
cap
off
tech.
from
Now,
that.
the earnings were not that
Trying to
bad.
just have
It's
exposure
the
for
the investors are
a
really
sell-off
sensitive to
or
any
potential crash,
suggestions that there was some
which
slowing growth, that being in
I think we
cloud
could have
primarily, and they
next
took
6
it out
months.
of them. So we're still kind of doing a little bit of price discovery and a little
Guess what,
bit
Liquor?
of
Is it down
near-term
like
technical
7%?
bounce here, but it's there's no clear indication
On
of
SPY,
where
do it.
that
3
money
minutes.
flow wants to go right now, unless you
Do
want to
it.
spot something like Bitcoin and gold and
Do
some
it.
of those names perhaps. But the selling started to get a little bit.
I hope you
moving
stayed out
towards
of that,
one
Guts. After you
correlation,
somehow made money on it or
last
broke
week
even.
So we'll keep an eye on
Dang.
it this week and see how those catalysts move.
I don't know how you could do that without shorting it.
Never good with correlations to go to 1. But that Russell's been the one that's been kind of the canary in the coal mine. Thanks for the contribution,
when to
guys. Great call. Ray
close.
Pearson, Colin Martin, spot on stuff. Nice work, guys. Coming up, closing bell. Then we've got Aristnet and Pinterest. Be right back.
Into close. Yes. I mean, VWAP would be pretty sick. That would make these options quite profitable. I'm thinking this support, which was the breakout, prior resistance. As we are now below the 5, maybe we could get there. Find some support. Final call. SPY's up 1.2%. AMC's up 9. Minute. I'm closing 5 of these here. Half. Close the other half probably after hours. Okay. 30 seconds. AMC tinkering with $10 into close. Buy. Down a little bit. Okay, that's the bell. Awesome guts you got out of there. Get out of that liquor play. Oh wait, it kind of did hit my level there, didn't it? Really close. Come on, 4. 4.
Bell, small caps added on like a full percentage point almost, as the Russell was down at 1642. Decent little comeback there. We are still ending the day below where we started, but it kind of depends on when your day started. If it started right at the opening bell, then we still ended down. So we were off the highs of the session in the overnight for the Russell. Not for the S&Ps though. For the NASDAQ, not quite. NASDAQ didn't get back to its futures high, but the S&P 500 did. And the Dow had a pretty good day too. And it had a steady rally throughout the session, actually. The Dow was pretty solid, and given, of course, the smaller sample size of companies. You had a couple big names pulling, like Nike, Goldman, and Verizon. Microsoft, too. There were only 2 down movers in the Dow today, Merck and Walgreens. Got our closers panel, Kevin Green and Caroline Woods, our senior markets correspondents, as we stand by for Ristonet and Pinterest. Caroline, decent little start to the week there as stocks get a bounce, and boy, we've got a busy calendar. What's everybody talking about there?
Well, I think this week is going to be all about Apple, of course, in terms of earnings, and the Fed, of course. Although I don't know that we've ever been so certain about what the Fed is going to do at a meeting. Yeah. But back-to-back meetings of rates on hold, I think, could, maybe spur a little bit of optimism. But it definitely just seems like this market is trying to claw back.
Whoa,
after
that candle.
abomination that was last
I couldn't
week.
close there.
And, you know, I think sentiment seems like it's improved at least a little bit. Of course, we're ahead of Apple. We have Aristanet and Pinterest. Don't see either out quite yet, but you know, it's always you know, the companies that aren't necessarily as exciting to talk about. I always feel badly when it's like, oh yeah, we have those as well. But
Confirm
here we
best
are.
Monday.
Well, we like to have fun with it. You know, we can't forget the middle of the pack, right in the meaty part of the curve. Companies like Pinterest and Aristanet. I mean, I think Pinterest probably the most fun from like a story standpoint, Kevin, but Arista maybe more meaningful on what it tells us about incoming earnings for the rest of technology.
Yeah, definitely. Arista is going to be able to provide us a lot of insight when it comes to networking solutions, not only from a hardware standpoint and from the product standpoint, but also software and what they are actually integrating within their software suite in order to integrate AI and things of that nature. So I think both of them are going to really provide us some really good insight into the consumer when it comes to Pinterest, and then enterprise when it comes to Aristanet. We do know that we did see a little bit of a backlog or a little bit of an issue when it came to the supply chain on the network side of the business. So that actually has been pulling forward here over the last couple of quarters. Let's see if that's going to continue here moving forward. If they do believe that the outlook is going to be, for the most part, bullish when it comes to the networking suite.
Okay. And given that they're still up, like over the past year, just shy of 50%, seems like there is some embedded optimism here in Aristanet, Caroline, going into this report.
Stupid.
That said, rough couple days just pulling back with the broad market. And that, of course, does kind of make us a little bit, I mean, it makes me a little bit concerned that even some of the big winners could be at risk here, like we saw for On Semi. You can be taking market share away from your peers, which Aristanet has been doing from some of the legacy players. But maybe there's an issue of too high of expectations, where the market needs like constant guidance surprises.
Well, maybe the fact that it's down 4.5% this month has lowered the bar enough that we'll get an earnings pop like we saw with Aristanet last quarter. Obviously, Aristanet incorporates AI-driven technologies into its networking solutions products, and it's ridden that AI wave. But some might say a 45% increase in year to date for a company that has embedded AI. It might, it certainly pales in comparison to some of the other companies that we've seen. But, interesting I don't see, oh, actually, you know what, let me just check.
There we go.
It looks like it just hit. I was going to say, yeah, so let's just break down these numbers then, because the expectation for adjusted EPS was $1.58. Easy beat there. $1.83 is what Aristanet just came out with. Revenue of $1.51 billion. Beat the estimate of Wall Street of 1.48. The guidance was between 1.45 and 1.5, so actually slightly came in higher than that as well. So sequential growth over last quarter, also quite a bit of growth from last year.
Okay, I'm closing these last ones, taking the L.
$2 billion last year. So
this one, yeah, kind of another.
It looks like we were talking about that bar for Aristanet. There was a little bit of weakness heading into the close.
Spin wheel.
It looks like shares are popping higher now on this news. Obviously, we've seen this happen, and then wait for the earnings call. And
yeah. All right, let me review these really quick.
But overall, looks like a beat,
actually,
and it looks like
it's not like a
investors are happy
bummer
with
every
it.
day
I'm seeing
because
shares up a little bit more than 2% right
I feel like
now.
I traded too bad. It was
Nice little,
there's
double
actual
beat there.
errors that
Bottom and the top line.
made it red.
Fourth quarter revenue,
I set stop losses. I took profits. I think I did stuff right.
And I think that's going to be a range that
Another one
exceeds
mistake
the
I made.
average estimate.
We'll go over that.
So I see the average revenue estimate for next quarter, the fiscal fourth, at 1.47. So this was, basically the street was expecting them to have sequential plateauing, basically, of revenue. The street was expecting them to hit 1.48 this quarter and then 1.47 next quarter. So not only do they beat this one, but then the next quarter, it seems like the range is upward too. So there's almost kind of like a momentum beat here as well, Kevin, when we kind of think about the rate of change quarter to quarter.
What? Thank you.
Definitely, and you're also seeing
Very
an
thoughtful.
expansion when it comes to their operating margin, which is always going to be key, right? And that's going to
Some people
really
just can't let
fuel
people
your
bluff.
bottom line growth. I think
All right,
one
I'm
thing
out of
that
there.
we're kind of seeing a
There.
little bit
Up
of
on the
this
day on
choppiness
poker.
is if you look at it from a
All
quarter basis,
right.
it does appear that they're kind of
A
pretty
little,
much
let's set the mood
plateau,
here.
as you kind of just talked about when it comes to quarter over.
There it is. There's the mood. Bad week last week. Very red. Broke rules. Revenge traded. It's weird to say because I don't feel like I do that, but I don't. There's no other explanation for some of the stuff I do. So, anyways, this week I'm trying to start slow and making sure I set stops, like not just forgetting to do them, and profits and what else? Yeah, not over trading, just waiting for the best setups once again. Anyways, 9:53. So I was trying to wait this morning for like the first hour, but I didn't want to put a time frame on it. Waited for this whole move. 9:53, bought 10 puts. So here, I did have channels here. Broke a channel. It was at, where did I get them up there? Wait, where? Okay, yeah, I was right at that pre-market move the other day. It was just kind of an entry. What? Okay. I erased a lot of the lines from today, so if you missed it, you gotta be here during the stream. But yeah, got kind of an entry here. It's planning on adding. Held, it did this double top, thankfully. Almost closed out, but I thought it might just be double topping here. If you can see, we were kind of tapering, had this steeper trend up, and then it started to roll over, and then a little double top, then you have a head and shoulders here too. But anyways, bought 10 here on this candle. Yeah, the beginning of this candle. And then sold two, close to at 10. So right here, kind of retesting that low. Sold two more at 10.03. Right here, probably at VWAP, let's see. No, 10.03.43, so somewhere down here, not bad. Sold 4 at 10.07. So right here on this, where it starts to bounce. Support, and 4, 6, 8, that was all of them. So I was totally out at that point. Or wait, no. That 4 got stopped out, that's what it was. Yeah, the dailies are crazy, man. I stopped out right here for break even. What the heck? I like stops, but I don't like them on dailies. I just have to give myself more room. Anyways, yeah, so what I opened right here, 9.53, this price, it was the same price as it was right here. I stopped out. It was $1.01 contract at 11.14. Wait, 10.07, 10.07.43. They stopped out. So somewhere on this little candle, those contracts were the same price here as they were here. Like, shows how important it is trading dailies. Just entering on the right candle color. This is crazy. Like, if I waited here, these contracts were down like 30% on this stupid little bounce. And then I got stopped out right there. So, I don't know what I'm gonna do. Maybe I'll open up my stops a little more on the dailies, give it more room. Because I did take profits, so I could have changed my stop from break even to, you know, basically into the red on the rest of those contracts. But anyways, bought 10 more puts because I saw this little inverse cup with a handle, which we were talking about, and a little test of VWAP. Anyways, bought 10 more puts at 11. So yeah, I missed a big part of that move down, unfortunately, because I got stopped. That would have been nice. But I'm happy I did the stop. Made profit on it. Anyways, waited all the way until 11. So wait all the way till up here for puts. When I get 10 more here. I don't know. Test of VWAP. Wait, no, 11.14.22. There, okay. So not as bad. I had channels at one point drawn. Retesting that as a resistance. Breaking out of upward channel. So 11.14 bought 10, sold 2 at 11.16 right here, so a little profitable. 11.19 sold 2 more, sold 2 more at 11.23. So on this candle, retesting that low, that's nice. And then stopped out of the last 4 at 11.33. So I'm fine with that. I sold a majority and stopped out of minority, which could have sold more in hindsight, of course, but at this point I was thinking, I took some profits there, but I was thinking we could still, of course, keep going down lower. But with the dailies, they could just get stopped so easily. So I guess that's fine. But then that just kills my buying power so quickly because I'm taking more contracts to price in and getting stopped out of a large amount. So anyways, last 4 stopped at 11.33.50 right here. And then at 11.51, about 20 calls. These were daily still. Right here. So I think breaking this channel, breaking VWAP. I have to go back and look over what was going on at that point. But yeah, 11.51 right here. About 20. Sold 2 at 11.54. Right there in that first red candle. Sold 2 more profit at 11.58. Right there, this high. Retesting that high. Sold 2 more at 12.01. 2 more at 12.02. And then sold the rest. All for a loss at 12.09. How is that a loss? That's so weird. Oh, I forget these are delayed. It was on this candle. Isn't that crazy? 11.51 to 12. Yeah, these calls I bought right here were worth a lot less right here. Should stop doing dailies. I don't know. I just have to be much faster and more thorough about taking profits. Really can't. And have to enter and exit on the right color candles. Like, oh yeah, I remember this one. I was all bummed because it bounced back up. Unfortunately, that was not a stop. That was a manual close. Yeah, if I had a stop, it actually most likely would have closed higher. So, anyways, that was a fine stop because then we just ended up chopping there. And I was still green. I was green on the account. So I'm green on that account. That's all the trades on there. So that account's up 4% today. And I waited. And it's hard though. That midday, it's like it was just wedging between multiple channels and just waiting for it to break out. And then it kept breaking out to both sides. It broke out bullish, and it came back down to the bottom, broke out bearish. It did that like twice. And then just that midday lack of volume, it just gets big wicks and choppy and makes you think it's gonna go crazy. It's hard not to get sucked into that. I did a little bit today. Let me see. 20 contracts tomorrow's because I was on the backup account at 12.36. These were calls. Yeah, that was on a channel break. Yeah, this is the one. This was the one that the mistake I did make. I should have closed these much sooner. It was a false break. Should have just cut it. I was holding and hoping, which you never want to do. I was thinking it's going to come to the bottom of the channel now. Maybe it'll bounce. Yeah, should have cut that right away. Yeah, I bought 20 calls here. So on the break, false. 12.30, yeah, right here. So close those at 12.43. So right here. Close them at VWAP. Actually, it's probably here even. Yeah. Which I'm still fine at close them. I just wish I closed them sooner. Even though it rallied like That's all hindsight. I wish I'd... Once the reason I got in them wasn't there anymore, that's when you close it. Why'd you get in the trade? Because of this? And that's not there? Then you're just gambling. So it's like, you just gotta ask yourself that. Or you say, oh, would I buy this right now? It's like, no, then sell it. Better not to have a position, just sit on the cash and wait. 1243. I was back into calls. Okay. 1243. So right here. Is that true? What happened here? Interesting. I bought him right back. That's weird. I don't remember being that close. Oh, this was that stupid. Yeah. So this is also an error. Okay. So I was trying. Okay, so at this point when I was selling these calls, I was trying to buy puts. If you remember, I was trying to do it in one trade, and I haven't done that on Fidelity, and I just forgot, I guess, to change it from call to put. I had the right strike, had everything. So I sold 20 calls for 414 right here, and then I bought instead of 20 puts at 413. I had the calls 414. I was trying to buy 20 puts at 413. Instead of doing that, I bought 20 calls. So I sold 20 calls 414, bought 20 calls at 413. Okay, so that's what made me red overall today, was that error, which was a sucky one because those are large contract size, especially for tomorrow. So those aren't even dailies. And it just, yeah, emotionally and mentally, it just festers a bit. So I wasn't I was kind of pissed. Wasn't super frustrated though, because I liked how I was trading. Besides that, other than not cutting my losses, I liked that I called that should be reversed from a call to a put. I wish I closed the call up there and then waited for the confirmation, then opened the put. Instead, I waited all the way down here and then flipped, but didn't actually flip, just bought more calls. So yeah. Then I closed those calls at 1246, so literally right at the low, which of course. But again, this is high. I mean, there was no reason for me to enter him here at this point. You know, yeah, sure, bounced off this low. I didn't know that time, so that I'm not trying to hold and hope. So that, anyways, close those calls and wanted to wait for the proper setup. So anyways, let's see, 1256, bought 15 puts right here. Yes, because this came up and retested this resistance. That's what it was. Shouldn't have deleted all those channels, maybe. There was resistance here. It came up, retested, had a little head and shoulders. This was maybe a little bit of a gambly revenge trade. I could have been more patient on that. Not even talking about hindsight. I kind of remember this trade and I was like, I didn't feel like I did the best on that one. Like it kind of made sense, the trade. Yeah. Anyways, closed those out. Took a loss on that 105. I forgot about that trade actually. That was a little bit of an over trade. But look, I didn't wait too long. Closed it out right here, 105. So back to VWAP. Closed it. If it would have come down then, I would have been really tilting. But it didn't. So close it out there. Then waited for the break on the top side of the channel, that much larger channel. Which I figured would be a big move. It was these highs right here. 1, 2, 3. Right here, so it was breaking above that. Somewhat of a pattern. You got an inverse head, shoulder, shoulder on the other side of that channel. So got 20 of these calls then. I was at 109. So right here. Right there. And then remember it chopped for like 15 minutes and I was like, whoa. Because I was a little tilty at that point, I suppose. But anyways, held through it. 122. Right here. Sold my first two. 126. Sold another two. I need to be better at waiting for once the move starts. I need to be better. Well, I shouldn't say that because sometimes you don't get it. Like if I'm getting calls here and I'm holding here, I think it's gonna go to high day or some resistance, and it doesn't. I need to take profits. So that's kind of what I was doing here, just taking profits, no problem. because it could have ended here and we just had a downward channel then. Anyways, no sign of that. I mean, all the candles were green, but yeah. So sold 2 there, sold 2 at 126. So kind of right there. Looking at that, kind of this high still. Just wanted to reduce some exposure. And 127s, yeah, then it's starting to sell too many, too fast. 27 sold 2 more. Or no, that was another resistance. So I could have maybe sold 1 less time in there. That first one I could have waited a bit. But other than that, I sold at both resistances. Sold 2 more at 129. So right here. Top of this channel. Or close to it. Sold 2 more at 131. So top ticked that one nicely at the top of that channel. Sold 2 more at 143. Yeah, and then once it was up here, I didn't really have much. There wasn't much structure patterns. I was just kind of didn't really know when to sell or what to do. So, but my clerical or my big error was I didn't leave some for the homies. I know better. I just totally forgot actually. Sold 2 at 144. And then yeah, actually I bought back in. I didn't know when to. So that was a bad idea to execute a trade when I didn't know when. Dumb. So I was right here. It was on a break of that. I was just like, I don't know, maybe that was the handle in this big cup that we made. Bought 5 there. These were out of the money then. The other ones were in the money at this point. Sold 1 at 153 of those new ones I bought. So yeah, the next minute I sold 1. I didn't like these like right after I got into them. I knew shouldn't have done that. And then the ones that were in the money, the 414s, I sold 1 more at 158 right here. Sold another one of those in the money at 2 right there. Sold 2 more that were in the money at 222. So yeah, testing the top of this channel right here. So I like that. I like that close. Sold 2 more of the in the monies at 223. Yep. Might be the top. However, I should have left some runners for the homies. And then sold 4 at 223 of the out of monies. So 223. Okay, I sold the rest of those there. So small loss on those out of the money ones, which was my mistake. I literally just forgot because a couple of runners would have been nice. Probably made me green on the day actually, even just like 2. And would have probably kept me from trying to call a reversal with these puts that I foolishly bought. 225 bought puts. I could have bought the puts and still had a couple for the homies on the call side. Don't have to completely flip. Sometimes I don't. Sometimes I'll have strangle or whatever. And then just leave a stop for the calls. I didn't. Today I just forgot that whole thing. It's Monday. Bought 10 puts there. So it sucked. These were both a L. 10 puts there. Oh, and then I stepped away. This was the problem actually, because I would have closed these. I mean, I think I would have. Because remember I was saying head and shoulders, so I'm gonna get some puts, and I did, and then I stepped away for this move. Should have put a stop on it, I guess. But I started doing that as I got back, and it was like up here. I'm like, broke the head and shoulders. And by that point, you know, I'm like, oh, I'll just wait, and it'll come back down. Which it didn't. It did, but they weren't as valuable here. Sold 5 of those at 225. What? Is that real? Did I actually do that? No, that's when I bought it. Wait, 225. Oh yeah, back there. Okay. Sold 5 at 359. So I did actually get a pretty good exit on it, for what it was, but it's still lost on it, on that trade. And then sold the last 5 at 406 after hours here. So basically did the best I could for that bad entry and then holding where I should not have held. There you have it. Today was pretty nice really for trades. I mean, I had a couple of fake outs in the morning. and some liquidity building and consolidating, which can wreck you if you're not careful. Had exposure for the long here. I missed this move in the morning, just caught some of it. Missed this whole bit, unfortunately. But if it had broken out here to the downside or here to the upside, would have had exposure to both those, which is good. Made that mistake in here, that air, and then over traded right there. But then got back on my horse and saw the call opportunity and bottom, so that helped. Helped, but didn't totally fix. Yeah, still down a little bit on the day. Well, I'm kind of content with that though. Thanks, Jay. There's so much futures in it. YM. Your stock like Tesla. Manage these funds segment thing. You don't have settled funds. Is it a cash account? Not sure. Fund segment thing. Segment securities? I'm not sure what that means. Sounds like you're either on a margin account and you're under 25K, or you're in a cash account and you don't have any settled funds. If you just sold a future, MYM, is that a future? Was that a future on? If it was a futures contract, they have to sweep, so they're sweeping it from your futures contract to your brokerage, and so that takes a day or two if you don't have funds already in there. So it gets just a day. So by tomorrow you should have buying power back in your regular brokerage. You have to sell your futures though before the futures market closes at 5, and then it should sweep back into your regular brokerage. That's your question. I don't know what segment, maybe what your brokerage calls it, segment thing. I'm not sure, but I hope you left a like for that very valuable information that might be incorrect. Thanks for your likes, guys. 22 on the day. Appreciate it. 4:30. Got an extended one today. We'll see you on Discord. See you tomorrow. Okay. Peace out.